Time go. Hey, good morning, Steve. Off for scheduled car maintenance. Well, let's take a look at what you did before the car maintenance. And guys, this is going to be a little insight to what we're going to talk about today for those of you that are new. Steve says, check it out. It's a strong trending market. There's absolutely nothing in the way. So I'm going to get above things that could make the market bounce. I'm going to put a couple in. I'm going to take a couple off. I'm going to make my money, and I'm going to go get my car fixed. Momentum and path. So I want you guys to remember that phrase. Momentum and path. Momentum and path. Everything that we do is going to revolve around momentum and path. So those of you that are brand new with me in here, you're going to hear that a lot. You're going to get tired of hearing it. Momentum and path. I'm going to look at charts. I'm going to talk about momentum and path. You're gonna wonder what went wrong. I'm going to ask you to analyze momentum and path, but I'm also going to teach you momentum and path. Small crowd so far. I'm a few minutes early. Probably some people finishing up, getting some coffee. While we do that, let's check news. And today is Thursday, August 7th. And I want to show you guys my approach to the news. And Victor, I appreciate what you posted in the room. Around the news release, Victor posted, go figure, unemployment claims higher than expected, and the markets still went up. No, on news. I'm going to tell you guys right now, news, I don't care that it's unemployment claims, doesn't matter that it's non-farm productivity. I don't worry about any of these things off to the right. I don't care what they say about it. I don't care how they feel about it. We check news each and every morning because when you see that red box, there's likely to be a reaction. And that reaction may be that they buy. And when I say they, I mean the people that are in control. It's not you, believe it or not. I know it's hard to believe, you alpha males and females out there. They buy, they sell, they panic, they scramble, they do nothing. I never know what it's going to be. So anytime I see news, anytime I see a high impact news, guys, and I stop by forexfactory.com/calendar every morning. Momentum man, I like that. Here's my next tattoo, Ron. I look for these red boxes and I just say to myself, I have no freaking idea what's going to happen, but I know that it could happen. So I choose to do nothing. So guys, that's my first stop every morning. As overthinkers, we tend to put more value in things that don't deserve the value. Good morning, Roy. It's great to see you. Andy, man, good to have you. Please don't tell me where the tattoo will be. Well, I don't have any space left where I can do it myself, so it's going to be somewhere. So let's get moving, guys. Hey, good morning, Dip. There are two platforms that you guys are using in this room. Some of you are on NinjaTrader, and NinjaTrader uses a dynamic Rinko bar. It's a very smooth look. Good morning, Estefania. Every bar is the same size unless it's a reversal bar. And guys, it's a little faster endeavor than TradingView, which is using minute bars. And these minute bars take a little longer to produce. So my ominous warning for you guys in the morning, not even an ominous warning, I'm being dramatic. If you are looking at TradingView, please do not treat it like Rinko bars. And if you're looking at Rinko bars, please don't treat it like TradingView. So those of you that are looking at both, the only common thread is going to be the areas that could stop the market. And that's what you're going to look at. So remember that they are two different platforms, and they have two different sets of rules and two different ways to read them. We'll talk about both in the room, guys. I promise. You can ask questions about either. I will address them, but because the majority of my room is on NinjaTrader, I want to talk about NinjaTrader first, and then we will get into TradingView. Post your TradingView charts, guys. Post your NinjaTrader charts. Post your questions for both platforms. I promise you answers, but I'm going to get through the NinjaTrader rules, and then I'm going to go through the TradingView rules, and then we're going to spend the rest of the day looking at your charts and talking about the live market. I mentioned coming in over and over, momentum, path, momentum, path, momentum, path. So we're going to start on NinjaTrader, guys. And if you're brand new with me and you're into NinjaTrader, that's their platform of choice. This is the recipe for the highest probability trend trade that we teach. This is a trade where each indicator on every chart agrees with the rules for the trade. This is a trade that gives you the potential to win up to 70 to 80% of the time. But the most important thing that this trade does for you, brand new users, is it's going to teach you to read your indicators. Because when you read your indicators, you'll recognize the advantages that create the trade. So we're not focused on the $100, the $200, the $300. What we're focused on initially is identifying strong triggers, rule number one, because that's going to provide the advantage of momentum. And the advantage of momentum will carry itself into everything that you do. Then we're going to use it to recognize no termination conditions, making sure that we have a clear path. Whoop, guys, give me a Y if you can hear me, please. Sound, oops. Andy can hear me? Okay. Andy, you're the only one, I guess. So this is the Mark and Andy show. All right, let's see if I can do a quick little reboot and get us back to it, if you can hear me. Sorry, YouTubers. I'll be back in just a moment. Promise, promise. All right, Discord coming back up. Hopefully you guys can hear me now. Let me reconnect to my room. Let me get into that education room. Let me look at my chat box. Are we good? Yeah, we are. That's what I'm talking about, guys. And you know what? Trading is a lot like Discord, guys. Sometimes things aren't going to go your way. Nope. Dip, it is not possible. We can't get the Renko bars on TradingView. Trust me. John Novak spent an awful lot of time and money trying to make it happen. We do have fibs coming in the next couple weeks. I don't know. That is so far outside of my brain capacity to understand the programming. I don't know what the challenges were. I just know that they couldn't recreate it the way Nexgen presents it. So we have to use the minute bars. Cool. Wouldn't it be awesome though? Man, because for those of us that are into the Renko bars that have been doing it, that'd be really rad. But the fact that they tried real hard, but we do have fibs coming, guys. And Dip, between you and I, everybody else close your ears. I think once you learn the minute bar reads, it slows the market down a little bit. It opens up doors for a lot of people to be able to look at the NASDAQ and not be overwhelmed. And I like the moves in the NASDAQ. That's just my own personal opinion, guys. And it's worth exactly what you just paid for it, which is absolutely nothing. It just took a second. It took me about a week to get comfortable with the reads. It took me about 2 or 3 weeks to stop treating minute bars like Renko bars and TradingView like NinjaTrader. You trade in, me too. And you'll find, Dip, that it slows it down just dramatically, which I think is an advantage. And the risk that I have typically on the minute bars is lower than I have on the Renko bars. I'm not trying to play favorites, guys, but I do have a favorite personally. I'm going to get back into it here. Sorry about the sound, guys. So once you can recognize strong triggers, you have the advantage of momentum. So trades are an accumulation of advantages. Once there's nothing in the way and you have room to profit targets, we're going to call it a clear path. Guys, once you have these two, oh my goodness, believe me when I say it, once you have these two, you have the keys to the kingdom. You have everything you need to make good decisions, to create a plan outside of the plan that I give you, to find a way to make consistent money. Your first entry is the entry for the high probability trend trade, guys. It is using um, pullbacks to define entries. So 3 rules is all it takes to recognize this trade, and it's going to happen on only 2 charts. I am the epitome of the simple man, guys. If you've ever seen, what was it called? The Last Samurai. Tom Cruise in the fight scene, and the guy comes up and he goes, "Man, Tom." He didn't call him Tom. I don't know what he called him. You're too many mind. You're thinking about too much. You're thinking about too much. You're thinking about everything rather than what's important. So guys, we're going to define what's important. And you're going to learn to tune out some of the noise, and it's going to take a lot of the stress out of day trading. I already answered it, John Novak. Good morning. Welcome to the room. Large chart will lead the way, guys. You have a 13-2 and a 5-1 in NinjaTrader. Big chart, little chart. That's all you need to know. The big chart, the large chart, will define the direction of the market. Color, the background gives it away, guys. If it's green, it's up. If it's red, it's down. It will define that first advantage, momentum, using those strong triggers. That's rule number 1, is defined in the first bar on your large chart. And then also that clear path, whether or not there's something in the way, you're going to know on the first bar, which is pretty awesome, that all you have to do is look at one bar to make things happen. Once the rules are true on the large chart, you'll go to a smaller, faster chart, a refinement chart, taking the inner workings of that one bar and pinpointing precisely where the market is most likely to continue, giving you the ability to reduce risk, giving you the ability to maximize profit potential. So that refinement process looks very much like this. One bar on the large chart, I put a big black box around it, is going to define direction, momentum, trouble. And inside of that one bar, you'll see a retracement. Hopefully you'll see a bounce when the rules are met, and you'll see continuation. And there's about 20 bars inside of the one. That refinement process really does allow us to reduce risk, maximize profit potential. We're using these 2 charts, and this is a concept that's universal no matter what platform you're on, because we're reminding ourselves that we are not in charge. We don't control the market. My 2 contracts, 4 contracts, 8 contracts has no bearing on whether the market goes up or down. The large crowd is going to make those decisions. The large crowd, this is your big chart, is going to create the trend. The large crowd is going to give you momentum. The large crowd is going to react at the areas on your chart. Going with the large crowd puts you on the winning team right off, guys. It's like dodgeball in 7th grade. When all the athletes picked you, you know you're going to win more than you lose. The small chart is the refinement chart, the small crowd, and the small crowd fights. These are the ne'er-do-wellers, leather jackets and cigarettes, guys, and they push against everything that the large crowd wants. But the small crowd typically loses 70 to 80% of the time. Rule number 3 is going to give you the accuracy and the precision to pinpoint right where they're most likely to fail. This becomes your entry for the highest probability trend trade. So while we go with the flow and ride with the large crew, guys, we hope for and wait for that small crowd fight, and that's where the accuracy comes in. So let's go through the tools that we're going to use to impress our family and friends. Triggers. Triggers are on the big chart and the small chart. Triggers are going to work their way into everything you do. Triggers tell the story. I'm getting that crocheted into a doily this weekend. There are small triggers, 2 solid lines. There are large triggers, 2 dashed lines. These are both moving averages. This is your fast. This is your slow. Guys, when they're green, they're up. When they're red, they're down. Pretty simple. Go with the flow. You are going to use these triggers to define momentum for rule number 1. You are going to use these triggers to define trouble on your large chart. Rule number 2. You are going to use these large triggers to define entry on your small chart. Rule number 3. Triggers show up in everything you do. Let me give you the picture. So if you're brand new, start collecting pictures. Both charts will have areas. On your large chart, these are where that big crowd are reacting. These are the areas that could stop the market, that could create reversals, big untradeable bounces. They all have names, and you don't really have to know how they're formed. You need to know that divergence highs and lows represent a point where the momentum is lost in a move. So if the market is going up and then pivots down, if there's a loss of momentum, you'll see a negative number and you'll see a magenta line. The negative number is irrelevant. It's a byproduct of the calculations to create that pink line. Don't get hung up on the numbers. From a low pivot, if the sellers are in control and the buyers steal their momentum, you'll see the negative number and you'll see that cyan line. These lines behave as lines in the sand. And if you have a loss of momentum, look at that, it'll extend that line. If the buyers come back, that's usually where the sellers have the potential to tell them to go away. They were in control. So we're going to use those lines and we're going to recognize those lines. We're going to see Fibonacci resistance. That solid red line, guys, these areas of resistance are the byproduct of thousands of calculations, and they will show you where the market is most likely to turn, where it's most likely to bounce. The same is true with Fibonacci support. The support, when the market is trending down, could create a big, ugly, untradeable bounce. It could pull you out of a short position. These lines become great places to take profits. Yellow 1-to-1s are Fibonacci areas that print in the moment. This is in the now. The software is constantly running calculations. And if you see yellow lines and the market is trending up, it could behave as resistance. And if you are trending down, those yellow 1-to-1s can behave as support. And then finally, there are the mid bands. So on the large chart, these are the areas where these guys are making decisions. On the small chart, these are the areas, same lines, same names, where the small crowd is most likely to fail. So we're going to piece these tools together, and we're just going to take 3 rules. That's it. 3 rules, 2 charts, highest chance of success. Strong triggers. Rule number 1, easiest rule you're ever going to get, guys. If the background is green, the market's going up. If the background is red, the market's going down. In order to have strong triggers, small and large must also be green with the background, or small and large must also be red with the background. If there is some indecision, if you see smalls red and large green, if you see background green and the larger red, you don't have strong triggers yet. It doesn't mean there's not opportunity, but as the brand new user, we're going to focus on the best of the best. Strong triggers means in an uptrend that your small triggers have broken above and away from your large triggers. Your large triggers must be wide, angled in the direction of the trend. And it is that space that's created. And guys, this helps a lot of people. It looks like scissors, doesn't it? When scissors are open, they can cut you a check. Thank you, Jerry S. In a downtrend, smalls below, larger wide, space between. When the scissors are open, the odds are favorable for the market to continue down. So we're going to call strong triggers odds favorable momentum all day long. Odds favorable momentum is what pushes a market. Odds favorable momentum is what we look for to break those key areas. Odds favorable momentum will even help you alter your plan a little bit, trusting in the momentum to retest areas. But in the beginning, we're just going to use it, and we're going to say this is a market that will be difficult to stop. When your scissors close, when your small triggers work inside of the large triggers, this is where the advantage of momentum is no longer present. This is what we call weak triggers. And when I have weak triggers, anything can happen up or down. Guys, I'm a total language nerd, English Lit major. If I'm looking at my charts and I'm saying words like strong, odds favorable, can't wait to look for an opportunity. If I'm saying words like weak, anything can happen, that's kind of my clue to sit on my hands. And it's not difficult to recognize. That's the wrong chart. If we go to a large chart, and this is crude oil right now, strong triggers, smalls below the large. Does everybody see how the market continues down? Strong triggers up. It breaks areas. It continues up. And look what happened when there was weakness. The market turns on you guys. The advantage is gone. So what we're going to do is we're going to use this momentum that pushes a market. We're going to use that momentum that can break key areas. And when we see weakness, it's okay to sit on your hands. When we see weakness, it's all right to do nothing. So Can you guys give me a why in the room? That's rule number one. It typically is the shortest lesson. But once you have momentum, things start looking good, guys. Things are nice. It's hard to stop that market, but there is something that can, and we call those termination conditions because it terminates the trend. A termination condition is a horizontal line on your large chart. It's the easiest way to think about it. Anything the market is trading up to, whether it's a divergence high, resistance, or one-to-ones, could stop the market. Anything the market is trading down towards, whether it is Fibonacci support, one-to-ones, divergence low, it could stop the market because that's where these men and women are making decisions. That's where these people in control of the movement are likely to enter, to exit, to fight. So in order to define a termination condition, we're going to talk about trouble first because we want to stay out of trouble. We want to avoid losses that we shouldn't be taking, guys. We're going to let the large crowd get to that line. So that means that your price bars, your Renko bars, go up and reach Fibonacci resistance. Once price hits that line, we're done with price. Price is no longer a factor. The trigger lines will tell the story once again. So price reaches resistance. Where are my triggers? Well, 1, 2, 3, 4 trigger lines remain below resistance. Resistance is a termination condition. Because it's a termination condition, rule number 2 is not met. And if rule number 2 is not met, absolutely no long trades into that area. It could bounce. It could break. It could reverse. I never know what it's going to be, so I choose to do nothing. Wait for the reaction. Price comes down, reaches Fibonacci support. 1, 2, 3, 4 lines remain above support. Absolutely no trades into that blue line. Guys, this blue line could stop the market, create a giant bounce. It could break. I'll never know what the reaction is going to be. So if rule number 2 is not met, I choose not to trade into that area. Let me show you how effective rule number 2 can be. We'll just take a bigger picture here. And right up here at resistance, things went sideways. They retested resistance, things went down. There's resistance holding, and there's support holding, and there's resistance holding, and currently they're right at support and making decisions, guys. And those big crowds are making decisions right at key areas. So what we're going to do is when price reaches an area, we're going to get into the habit of counting triggers. You're going to get into the habit of counting triggers. And I'm going to show you how this works. The rules for a termination condition say, if price reaches an area and none of the triggers break through, just assume that area is going to hold. It's hard to do because it means you have to sit still. Assume the area is going to drain all the money from your account. Assume the area is going to push down so stinking hard that you're going to get slipped, right? The same way it did right there when price reached the yellow one-to-ones and the triggers were below. If 2 of your trigger lines break through the area, we call this a 50-50 look, guys. And a 50-50 look means that 2 are above and 2 are below. If only 2 of your trigger lines get above that area, this area does have the potential to break. It's not a clear path yet. Rule number 2 is still not met, but a lot of you will trade based on that potential. You have to manage those a little more assertively. If 3 of your trigger lines, both small and 1 large, get above that area, guys, now we're starting to recognize a better position for a breakout, a more likely breakout. Still not a clear path. But you can trade with that potential. I'm going to give you a set of rules for it. But once all 4 trigger lines get above that area of resistance, now that area of resistance is broken. Now it's behaving as support. And guys, your path is clear and rule number 2 is met until you reach the next area. So it's going to be your ability to count triggers to recognize that clear path that's going to let you know whether or not your trade is high probability. If that clear path goes away, it instantly puts you into what we call a medium probability scenario that needs to be managed just a little more assertively. So let's go back to that big market. Weakness, rule number 1 is not met, and therefore no trade, right? Keep it black and white. and you avoid a loser. Only one trigger line makes it through Fibonacci support, rules are not met, no reason to go short, and you avoid a loser. If you believe that market's going up when it gets to the Fibonacci area and 4 triggers remain below, if you went long, you lost. If you followed your plan, you avoided a loser. Pretty cool how that works, right? Weakness, avoidable loser. 2 triggers barely through, avoidable loser. And you guys are like, well, shoot, Mark, when are we going to trade instead of avoiding losers? You're going to trade when the market is strong, when there's potential to break. And you're going to find opportunity in between these Fibonacci areas, guys. And the easiest trades that you will ever take will be between Fibonacci, trading away from support, trading away from resistance, and having room to the next area. Would you guys do me the favor? Rule number 2, wrong one. Termination conditions. It's going to take a little bit of study, but that is the key, guys. Once you have momentum and entry, it's time to go define an entry. I'm sorry, momentum and path. Forgive me, I'm a little hopped up on coffee. So once I have momentum and path, once those two are in place, guys, once the large chart says down, the large chart says strong, the large chart says potential to break, rule number 3 says that I am so stinking specific and precise that I'm going to use a limit order. I'm going to wait for the market to come to me. And I'm going to use a limit order to buy or sell a pullback. That pullback is the small crowd fight. And I'm going to do it at an area, at a fib, at a mid-band, at a yellow 1-to-1, because the same way they stop trends on a big chart, they create little ricochets to go with the trend on the small chart. But here is the key to entry precision, guys. Those areas need to be inside of triggers. So your entry chart will have large triggers. These are the smooth ones. Same thing you'll use to define momentum. And then they'll have a second set of large triggers. These are what we call synthetic triggers, and these are nothing more than the large triggers from the large chart, because these are moving averages, and price returns to moving averages, regression of the mean. That's the only math term that I'm familiar with. And guys, when you put large and synthetic, that's where the market's most likely to retrace. That's where this down push is most likely to go. And then if you put a fib or a midband or a yellow 1-to-1 inside of that retracement zone, that's where it's most likely to bounce. That's where the market is most likely to go up with everything that the large crowd said was going to happen. So when defining entry, there's a process, guys. And this process will take a little practice. I'm going to teach you how to study it. But when everything is going up, when the rules are met, you're going to wait for a reversal bar on your small chart. And it seems counterintuitive. Mark, why on earth would I buy the market in a downtrend? It's not a downtrend. It's an ugly, tiny little fluctuation that goes against everything that the large crowd wants. The large crowd says strong. The large crowd says clear path. The large crowd says everything is going up. And then here come these yahoos. Hey, let's push it down. Whoops, wrong one. I need to clear out some pictures here. That's what the reversal bar is. It's the beginning of the pullback. So once the reversal bar prints, I need to figure out, well, where are those down bars most likely to return? Somewhere from the top of your triggers to the bottom of your large triggers, guys. That's your retracement zone. That's where those down bars have the potential to return. Areas inside of the retracement zone are most likely to create a bounce. I want you to think of throwing a tennis ball as hard as you can. It's not going to stop in midair. It's got to hit something to create that bounce. These areas are that something. Sometimes there's 1, sometimes there's 2, sometimes there's 5. Each of them is equally as important, but because of the momentum on the large chart, because of the clear path on the large chart, guys, your limit order is going to go a tick or two above the highest point of support, closest to the reversal bar, because we're not going to stumble on a couple pennies trying to save a few dollars by getting in low. When it's perfect, limit order goes at the top of the window. And the great thing about futures for you new people is we can make money both directions. We don't care if the market goes up or down. We don't care what the news says. When I have momentum and a clear path on my large chart, my job is to wait for a reversal bar in the small chart to signal the beginning of the pullback. I can define where that retracement's most likely to go using the large and synthetic triggers. I can say it is most likely to bounce from an area inside and activate a limit order a tick or two below that resistance, guys. And that is the best of the best entry. That's your highest probability entry. That is the entry that typically wins more than it loses. How do I study it? On a large chart, when you have momentum, when the triggers are through, when it's time to look for an entry, guys, your market is trading all the way up here at the top of the bar. That's why we have to wait for the reversal bar. Small crowd says, hey, it's time for a fight. A lot of you are going to say, but Mark, there's only 8 ticks to that potential termination. There's only 8 ticks to that problem area. And you're right, there is only 8 ticks until the pullback, right to the area inside of triggers, right to the bounce. And guys, suddenly that $80 trade turns into a $320 trade because of the precision. So you can go back on a large chart and you can start to study this entry pattern, and that's all it is. That one didn't have strong triggers. If I have momentum, if I have the potential to break, guys, circle that tail. We don't trade these tails on a large chart. By the time you know it's a tail, it's gone. We're better than that. But if you go back to your smaller, faster chart, pull back to an area inside of triggers, and it never gets below that retracement zone. Pull back to an area inside of triggers, and it never gets below that retracement zone. And I want to show you guys something amazing about the 2-chart process. So I'm going to take that circle off. And I want you guys to give me a Y in the room if you're with me on this one. This is our large chart read. The trend is up. I have strong triggers, and 3 triggers are above that fib. You guys see it? You know what this says to me? Go look for a medium probability trade entry. So let's go through it. Reversal bar, whoops. Reversal bar signals the beginning of the pullback. At the time of the reversal bar, I can say without hesitation, they're likely to retrace somewhere inside of these triggers, somewhere from the top of the triggers to the bottom of the triggers. And guys, that's a lot of space, isn't it? We need to refine it. They're likely to bounce somewhere from that highest point of support to that lowest point of support. There's your window of opportunity. And they do. They blow right through support and they go to the lower. And they go even a couple ticks below the lower. But you notice they never get outside of that retracement zone. They never get below that moving average. If I entered here, guess what? I took a winner. If I entered here, I took a winner. That's your pattern. Over and over, guys. This pattern repeats itself day in and day out. So we use the idea that the market is most likely to retrace, it's most likely to bounce, and guys, it's most likely to continue with the large chart. Now watch what happens if I take that circle and I put it right at the bottom of that tail on the large chart. It shows the low of that move, right at the area inside of favorable large triggers. So as we go through, strong triggers, 3 triggers through, and it just pulled back to an area inside of triggers. But I'm going to share a secret with you guys. If the momentum, or if the path isn't clear, let's go back to those core concepts. A trade is 3 things, right? A trade is momentum, clear path, and an entry. My momentum is present. My clear path, whoops, we'll make it red. My clear path isn't there, and I can define an entry. So because of my very core basic chart reading, I can say to myself, this is not a high probability scenario. This is what we call a medium probability scenario. Because I am void of a clear path, I'm going to rely on momentum. I'm going to rely on entry. Well, guys, divergence is a loss of momentum, which means that I lost my mo, and I'm just focused on momentum. Small triggers inside of the large triggers is a loss of momentum. So now I'm working with clear path, nope, entry, right? Guys, this divergence, these weak triggers are the biggest killer of trades that only have the potential to break. And look what the market did. Couldn't have planned that any better, huh? Avoidable losses. And you're asking yourself, well, Mark, how the hell am I supposed to remember all of this stuff? That's a lot for a brand new user. And that's a fair question. I'm going to tell you, on day one, you're not going to get it. On day two, the language will start to click. On day three, you're going to be like, wait a minute, there's momentum. I'm starting to count triggers. Guys, by the end of the first week, you're going to be pulling these trades out of the market. So you've got to learn the trigger line and the Fibonacci rules for when it's okay to trade. Practice, 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 guys. Simulate. Practice trading the plan. Practice taking the entries. And keep it simple. There's a path to getting to where you want to be, guys. It starts with posting in the room. Post in the room. Mark, this is what I did. This is what I saw. There's my momentum. I had strong triggers. There are my terminations that only had the potential to break. And Mark, because there was no divergence and strong triggers, I entered at the area inside of triggers, and this is how I took the trade. Every time you take a trade, post it in the room. Get feedback on it. On day 5, you think you're a trade god. On day 6, you start the humbling process. Amen. Guys, your annotations on your chart, writing on your charts, telling me what you see, they're going to do 2 things. The first thing, if you're brand new, you shouldn't put the unrealistic expectations on yourself to be great at this in the beginning. You should understand that you're learning. You're learning to read your indicators. So when you tell me what you see, we'll make sure that you're seeing it properly. And if you're not, guess what? We'll fix it together. The other thing annotations do on charts, guys, is this is your recipe for success. Because when trades are great, you're literally writing strong triggers, potential to break, pull back to an area inside of triggers. You're reinforcing that there's a recipe for the best of the best. When you talk about annotations and advantages, you know whether you have all 3 and it's a high probability. When you go back to those advantages on every trade, you know if it's medium probability. Hell, you know if it's low probability. You're in control of the entry. Only you can pull the trigger, guys. This is not a group sport. So knowing what's working, what's against you, it helps you make decisions not only on entering, but also on how aggressively you may need to manage it. So the first step, guys, is get the feedback. For 15 hours every week, sometimes more. I'm live in this room, and my sole purpose in life is to help you read these indicators. Not to tell you when to trade, this is an educational room, but to help you learn to read your indicators so you can make good decisions on your own trading. The fastest way, and Crowbar said it, practice and study, practice and study. Use the spreadsheet that I give you. So if you're on NinjaTrader, guys, I'm going to give you this tracking sheet. This tracking sheet is each rule met in green on the first tab. Let me hit enter. It just dropped into the chat box. It's what it looks like when your rules are not met in red. This is over 500 pictures from clients using those advantages. Guys, use these to study that pattern. It breaks down your entry sequence. It goes through management. It talks about patterns that repeat themselves. It gives you a place to build your plan. And it gives you a place to track your progress. And no matter what platform you're on, this trade tracking sheet is money, guys, because you're going to put your annotated picture in the picture spot. You're going to talk about the advantages that you see. But most importantly, there's a giant spot for you to use the feedback from class. I took this long trade, and in the moment I thought I had a clear path. When I presented it in the room, it turns out I was trading in determination conditions. And not only did I do it once, I did it 27 times. And 25 out of the 27, I lost money. Guys, that's my autobiography. I had no idea I was trading into areas that could stop the market until I presented in the room. And I started seeing this recurring thing on my spreadsheet. Stop trading in determinations. Here's how to fix it. Stop trading into lines. Here's how to fix it. So I recognized my thing, and I got the coaching to fix it. And guys, if you do this every morning, if you come back to your spreadsheet every morning and look at what you did yesterday, ask yourself what worked, ask yourself what didn't work, set yourself up to the day to focus on the good things, set yourself up for the day by focusing on what you're going to avoid, and this will accelerate the learning. So the spreadsheets pay dividends. You have one for NinjaTrader. You also have one for TradingView that does all the same stuff, guys. It goes through telling you what you're looking for, what it looks like, ways to manage, no more longs, even a tracking sheet. No worries, Ron. I'm glad you finally asked. What capture software are you using? What are you using to take pictures? I mean, this is the perfect time to ask that question. What tool are you using to be able to take a picture? Do you have Snagit or Capture? Snagit, awesome. So Ron, will you do one with me? We can just do it together. And if you are in the same boat as Ron, Ron just made his life easier by asking a question. So Ron, I'm going to open up my Snagit, and I'm going to mash down this giant capture button. When I do that, it's going to let me take a picture, but let's do it on charts because I'm going to show you something. If I hover over one chart, Ron, it gives me one chart's worth of information. So after you hit capture, you're going to left click your mouse and hold that left mouse button down, and I want you to drag it all the way down to the bottom right. And what this is going to do is this is going to capture your two charts. Let me know when you have that picture, and we'll go on to annotating. And guys, everybody play along. I'm telling you right now, the people that post the most get to where they want to be the fastest. The people that ask the most questions get to where they want to be the fastest. My desire is that you guys post everything. We're going to do this one so that we can talk about the actual trade. Did you get your picture, Ron? And once you capture it, it drops you into the whole editor screen. This is where the magic happens, guys. Let me know when you have it. And ladies and gentlemen, this is what this class is designed for. It's not just post your trades. It's ask any and every question that you have about what we do, the tools that we use, how to use them effectively. Guys, nothing is off limits except maybe politics and religion. Were you able to grab that picture, Ron? And I'll tell you what, while Ron's getting his picture, I'm going to share something else with you. NinjaTrader users, this is the KISS plan. I'm going to drop this in the room. This plan is designed to optimize your chances of success, to give you the highest chance of success as a brand new user as you learn to read your indicators. It's a stepping stone. This is not the only trade. This is the best trade, the highest probability trade. This is the one that teaches you to read your indicators. Through simulation, study, class feedback, and continuous practice, ladies and gentlemen, each and every one of you will write your own plan. You'll begin to see different things. You'll begin to recognize different patterns. You'll find other more creative ways to make money. But it's all going to go back to, and this is, I'm going to say it at the top of my lungs, it's all going to go back to momentum and path. Damn near everything you do goes back to momentum and path. So this one reminds you where the rules are met. It gives you a checklist for entry, and it gives you a way to manage. And then it takes you to that medium probability, 50-50 trade, and it reminds you 3 of the 4 triggers through. Divergence kills it. So guys, this is your roadmap to get you going as a brand new user. This is the plan that allows you consistency while you learn to read your indicators. So I've never had anybody go through this, follow this plan, do worse than 70%. I've never had anybody follow this checklist just for the high probability and do worse than 70%. This is giving you the ability to find success as you go search for success, guys. So strong triggers, no terminations, areas for entries. That's in the room as well. You get everything you need to be successful as a brand new user. Ron, give me a little vocal here, man. Do we get a picture? Are you struggling? I want you to be able to do this. All right, well, Ron's doing that. Let's go over the trading view plan, guys. I'm going to drop this in the room. Nexgen gives you a plan. Nexgen gives you the indicators, everything you need. So the trading view plan, say it with me if you're on trading view. Trading view is not Rinko. And if you're on Rinko, Rinko is not trading view. You're going to use a 15-minute chart for your large chart. Guys, these are minute bars. Your 15-minute chart is your roadmap for key targets, for turning points, for terminations. Guys, the trigger lines on this chart are going to determine the direction, the background color the same way. Your 1-minute chart is going to be your entry chart. This defines the immediate strength of the market. You're going to look to buy and sell pullbacks on a smaller, faster chart. You're going to look to use the momentum on this chart to find entries. Entries are taken at mid-bands for trend trades, high volume area lines from terminations, high volume area lines and zones for momentum trades. And what you're going to find is that the indicators on TradingView are 90% the same as the indicators on NinjaTrader. You're going to have trigger lines, small and large triggers. Let me make this bigger. For those of you that are old like me, you're going to have small and large triggers. And guys, when there's separation, that's a strong trend. That's strong momentum. But it's such a slow chart, we're going to change our focus a little bit. It does, your computer, when you take the picture again, the second time it has done this during class, when you say up, my computer up, is that F up, froze up? Okay, it is F up. There you go. Ron, I'm not sure. If you wanted to, get with tech and see if Jason can find something that's freezing that up. Jason's amazing. Unfortunately, I'm not a Snagit tech, and I'm not sure why it would do it. Maybe it's a memory issue. Maybe it's an internet issue. I'm sorry. Separation between the two fast and slow, or between the large and the small. So you just said the exact same thing, Dip. Small triggers are fast. Large triggers are slow. So separation between the fast and slow, separation between the small and large. Same thing. Does that make sense? So this is just a general look. This is when the market is strong. This is when it's pushing hard, when you have that separation. But because it's such a slow chart, because it's such a broad stroke of a brush, we go through a little different process. So when reading trigger lines, when establishing momentum, if you see that separation between the small and large, something in your head has got to say, there's no freaking way I'm looking for a long trade. But that's kind of where that separation stops. Everything's down, the separation is there. That's a freight train to the downside. But what happens is, because this is a 15-minute chart, we're going to refine these trigger lines looks a little bit. So what I do, and what works, is we can say, okay, it's strong, it's down. But what you have to do, TradingView users, is I want you to look at your small triggers. And I want you to draw an imaginary line. And I want you to ask yourself, what direction are the small triggers going? And do you guys see that the small triggers are going down? I'm still only looking for down trades, guys. My job is to not fight. Dip, are you with me so far? The small triggers are down as well. But again, this is a 15-minute chart. It's a big, slow chart. So I'm going to ask myself the next question. Where is price in relationship to the small triggers? Is it left of the small triggers? Is it inside of the small triggers? Is it on the weak side, to the right of the small triggers? And if it's strong, that's your rock star look, guys. I'm not fighting my entry chart, but that's the strong side. That's where shorts don't have to be managed so assertively. If I'm in the transition inside of those triggers, price is inside, I'm going to be a little more assertive. And guys, if I'm on the weak side of those triggers, this is where transitions happen. This is where those triggers may roll. This is where I'm still looking for shorts, but I'm going to make sure that my 1 minute is focused and in favor of that trade. So strong side, transition, and weak. And then once I have that, my only question that I'm going to ask is, where is it? Is there anything in the way to stop my good time? This is your terminations. Do I see an area? Do I see a zone? Do I see divergence? And you'll notice that the trend is down. The triggers are down. The large are down. Everything is down, right? And I'm looking for short trades. But I've got this giant one-to-ones. And I've got a zone. And I've just got no place to go. So even though my small chart says down, right? My large chart says down, my triggers say down. Guys, we're getting into that second piece of the puzzle that says don't trade into areas. This is where decisions are made. It can stop your forward progress. And dip, it doesn't have as much to do with the trigger lines as it does where price is trading. Does that make sense, everybody? Trading view people. First, it's what direction. What do my small triggers say? Where am I in relationship to the small triggers? And do I have a clear path? Do I have room to make money? And the reality is that I just don't here. And you can see exactly what the market did right off those one-to-ones. That's where the market started up. So it's still momentum and path, but we have to think about it a little bit differently. So triggers are triggers. Guys, divergence is going to show up. It's a loss of momentum. It could stop the market. One-to-ones are going to show up. It's Fibonacci in the moment. It could stop the market. Mid bands, the same thing. And guys, the one addition is outer bands. You're going to see these on your charts. Outer bands should be used for targets. Outer bands are exhaustion points, and they can stop the market, and it's a great place to get paid. And if I'm outside of the outer bands, I'm only looking for direction of the trend that took me outside. And until I get back inside, long trades are going to be hard. And then there are the zones, guys. And this is the biggest difference between Rinko and TradingView. Because right now, John has a team of programmers creating Fibonacci for TradingView, but it's not there yet. So we use these Chart Prime, or there's other free ones some of you use. These are areas, treat them like fibs. Trade to them, trade from them. Don't trade directly into them. Does that make sense, everybody? So it's a different look. They're slower charts. And because they're slower charts, it takes a little bit longer. But the area sure did hold, didn't it? And then from the weak side of the triggers, I want you guys to see this. From the weak side of the triggers, you see the roll, and they start going up. And now I'm coming from a termination. It reversed the market. The small triggers are up. Let's just put a little box on it and see what it looks like when that transition happens. Notice that the market starts going up with it. Pretty cool, right? And then a little indecision. Look how big that 15-minute bar was, guys. From zone to zone. This is why it's a little different to read your 15-minute charts, because a lot can happen in 15 minutes. So making sure that you're on the good side of things. 1, 2, 3, 4 price positions. 1, 2, 3. This on the 15-minute chart. Absolutely, Paul. It's on that big, slow-moving chart. You're just asking yourself, what's the trend? Are the small triggers going with the trend? Where am I in relation to the small triggers? Is there anything in the way to ruin my good time? Which really sounds a lot like momentum and path. And the biggest thing that new users do, guys, is they trade into areas that could stop the market. The biggest thing that new users do is they hope that Fibonacci support breaks because of the momentum. The biggest thing new users do is they hope that that long trade works even though there's no momentum to push it up. And the biggest thing new users do is they second guess their beautiful entries because they are still looking for the money, not the process, guys. So I teach the process. The process is momentum, path, and entry. And anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. And guys, this is a good example. I had momentum. My path was clear. I could define my entry. And here's the great thing about defining your entry. As soon as you know where the market is most likely to continue through rule number 1, as soon as you understand where that bounce is most likely to happen, when you recognize that getting beyond the retracement zone, beyond the areas is detrimental, rule number 3 is not met, your initial stop will go 4 to 5 ticks beyond those triggers. 4 to 5 ticks below those triggers. So you will take losers. You will take losers. Because of the precision, your losers will be smaller. Because of the precision, you don't have to hope the market suddenly reverses from the middle of nowhere. Give up $700-800. You can get out with your $100 to $200 hickeys and call it a day. They're just zones. Dip. Treat them exactly as you would any other zone. It's a zone. They're dashed because it represents a gap in price. But again, don't overthink it. If you see these horizontal lines, they could stop the market. Good stuff, guys. So I'm going to reiterate what the path is. The path is learn your rules, guys. Learn your rules. Have a plan. Don't deviate because your rules should prove that the pattern wins more than it loses. Practice, 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 post, 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 guys. It's hard to post a loser in the room. It's scary to put yourself out there, to be vulnerable, to in front of a whole group of strangers, right? I got you, Paul. But post in the room. The people that ask the most questions get all the feedback. The people that post in the room, these are the people that learn how to correct their mistakes sooner than the people that think they can correct them on their own. So don't be scared. Keep it simple. I've given you each a plan, whether you are TradingView plan, here's your checklists, 100%, or whether you're a Ninja Trader. Guys, you have a plan. You have the looks of the plan, what it looks like to have your rules met, what it looks like to have your rules met. You have everything that you need to be successful with the software, with the exception of the experience, the repetition. So that's what we do together. Why do we drive in the parkway and park in the driveway? Victor, it's the same reason apartments are so close to one another. Duh. All right, guys, that's my first hour. Laying a foundation, learning a couple rules, looking at some things, recognizing advantages. The rest of the classroom is going to be chart reads and looking at your charts, chart analysis. So we're going to start on the S&P. Ron. So let's define momentum. Do I have strong triggers? Smalls above the large, space between. What do you guys think, new users? Do I have the advantage of momentum on my large chart? The answer is yes. All right, so once I have a clear path, do I see any things in the way? I do. And remember, it's not price that breaks areas, it's triggers that tell the story. Do I have a clear path, the potential to break, or is it a solid termination condition, guys? What do you think? Clear, potential, or termination? These are the questions that you have to answer, because once you know the answer, you know what you're up against. So Todd in, 2 out of 4 is crossing. We're going to call that the potential to break, but not quite a clear path. Did I have an area inside of triggers? Well, I did. And guys, if you were willing to trade the potential to break, you got a pullback right to support, right in the retracement zone, and the market is continuing up. It was a medium probability scenario. For some of you, it fits the plan. For some of you, it doesn't. But if I put that box at the bottom of that tail with the potential to break, it's right at support, right inside of the retracement zone. Does that make sense, everybody? And if you lost that one, you might have just made it back. But this is what we're going to do. Wow, there's my untitled workspace. Sorry about that. Let's get rid of that. We don't want that. So here's crude oil. Did that have momentum? It did. Did it have a clear path? Well, the mid-band wasn't quite a termination condition, but those large triggers were a full bar away, and price returns to the large triggers. Did I have areas inside? I did. Did it ever get to where the market shouldn't go? Not yet. We'll see what happens with that momentum, with nothing in the way, from the area inside that didn't get below the retracement zone. It's just patterns. It's just patterns. That's all it is. All right, guys. I'm going to leave you with this so you can watch and see what crude oil does. And then I'm going to go stretch my legs. And when I come back, he says, see my post. Just an example of making sure you check all your boxes before entering the trade. Market reversed, odds favorable momentum, clear path. The key here was the weak bottom. Just jumped in based on the big chart look. When that failed, it turns into the trend trade. You said you got out before too much damage was done. All right. And we'll see what happens. Well, we just got your 10 a.m. fib update, guys, and that may change the scene on it a little bit. We'll leave it. We'll let you guys watch and see what happens. I'm going to go stretch my legs real quick. When I come back, we're going to look at the charts that you guys were posting. We're going to keep going back to our charts and doing the same thing over and over. It's up. Smalls are up. Strong side of the smalls. Give me a Y. If you see that if you try to take a long trade, you don't have any room to get back. There's just no room to get back to trouble. And look what's happening right off of that zone. What's the trend? What direction are the triggers? Where am I in relation to triggers? Is there anything in the way to mess up my good timing? Guys, it's going to be that something in the way to mess up your good time that's going to force you to be patient more often than not. Does that make sense, everybody? That's the perfect look. Trend is down. Smalls are down. Strong side of the smalls. Is there anything in the way to stop my good time? Well, if you got in off the zone, this VWAP represents trouble. But then you go over and say, is there anything over here that could create a bounce? And sure enough, I've got a zone. I've got a VWAP. Not a lot of room to make money. Patience. Crude oil. Trend is down. Smalls are down. I'm on the weak side of the smalls, which means that if I'm going to take a trade, I'm not just jumping in. I'm waiting for the pullback to the mid band and a close below to put me in a trend trade, hopefully to get to trouble at 64.26. But because it's weak, if my entry's 47, guys, and it's going down, I'm probably already paid at $100. I'm probably hiding behind a zone, hoping that the strong triggers in the downtrend makes it to these one-to-ones. Does that make sense? Trend trade rules say when the large chart says go, don't fight the small. Your entry is a close on the correct side of the small triggers at a midband. That's your trading view plan. That is the language in the plan for the trend trade. 15-minute, not trading directly into one-to-ones, divergence, highs or lows. 1 minute, not trading into 3 divergences against the trade or a zone. Buy or sell close on the correct side of the small triggers. If you did it, that zone represents your trouble, and there's not a lot of room to make it, and sure enough, it ends up holding. Probably a way to make a couple ticks, get out, break even. But from the weak side of the triggers, I'm managing aggressively. Pretty cool, right? And sure enough, they overran. And they're starting to head back up. Little indecision in crude oil. All right, guys, those were your live chart reads. I'm going to leave with termination condition for the wind. I'll see you guys in 5 minutes. This is not a trade calling room. This is an educational room. If the rules for the KISS plan are met, I'll pull the trigger on simulator. I happen to be upstairs petting my dog, but with odds favorable momentum and a clear path, there's your pull back to the area inside of triggers, and ladies and gentlemen, it has not stopped yet. Pretty awesome, right? One of the things I used to get a lot, hey, can I talk to clients? Can I talk to clients can I talk to someone that uses the software? Guys, you're in the room talking to them right now. You're seeing the pattern. You're seeing that it works. Nobody has ever called my brother and said, hey, the software doesn't work, right? You just got to learn to work it. That's all it is. So let's go and start looking. Guys, as I look at your charts, we're going to talk about momentum and path. I'm going to answer the questions that you write on your chart. And I'm going to try to turn this into some pretty good lessons. So Paul got us going. Perhaps I answered my own question. Am I looking for weak triggers, small inside? So Paul, you're talking about the HVA trade, right? Getting in at a high volume area because of a zone. So area reach, triggers rolled, HVA, go long, right? Just didn't work, Paul. That's it. It just didn't work. You followed the rules. You traded the plan. They stopped you out, and then they went up. Great job catching the second shot. You're in the transition. You're coming from the zone. They just weren't ready to stop yet, Paul. That's all it is. But look what your HVA line did. It did go a little lower. You had it in your head to re-enter, and it goes right to the midband area, and then that's where it continues down with the trend. So these high volume area trades are a way to catch that first move off of a zone, off of an area. They're not home run trades, and you've got to have room to get somewhere. And those one-to-ones, 22, 22. So you're trading right at just above those one-to-ones. So it's perfect. It's perfect execution, Paul. They just stopped you out a little bit. All right, Victor dropped one in, and he said, for tomorrow. All right, so Victor, let's talk about it. Momentum, yes. Strong triggers. Clear path, 2 triggers through trouble. Entry area, pull back at an area inside of triggers. Could have selected your zone better and gain about 4 ticks. Sometimes you have to go twice, Paul. So, Victor, you said that it would have been better to enter lower. Is that right? And I want to address this. Can we talk about the rules? The rules say that the triggers define the retracement, right? And the areas inside of triggers define the bounce point. And it's the areas that we trade from because that's where it's most likely to bounce. And guys, when I talk in this room, might, may, most likely, could. Never definitive. But each of these words is based on thousands of pictures. So you could say, Jose, well, because I see what happened after the fact, I could have gotten in at the bottom of the triggers, right? How many trades do you miss with that mentality? That's what you have to ask yourself. Trading's about probabilities, guys. In the market, the probability is that it will bounce from the area inside of triggers. And the retracement zone, we use that to say, oh shit, the advantage is gone. So it's easy historically to say, oh, I could have gotten in at the bottom of the triggers. The same way it's easy to say, if I just would have bought the market right here against everything and gotten out at the top before it came down, I'd be rich today. Hindsight's 2020, guys. It's a good look on a medium probability trade. It has all the momentum. It has no divergence, the potential to break, the well-defined entry, and very intelligent targets. And Victor, you said that it went well? So Victor, when you say it went well, are you suggesting that the rules work? That if you just follow a plan that's been proven to win more than it loses, you have a great shot at success? New users, demos, and you more experienced users, feel free to answer in the room and help me out here. When do you typically take losers? I can tell you right now, I take more losers when I break my rules. When I follow my rules, I win more than I lose. And I'll say that just from my own personal experience. When I stick to my plan is good. My plan makes sense. My plan gives me an edge. And I don't gauge it off of one trade. I gauge it off of 20, 30 trades. It's a sample. All right. Great trade, Victor. Great look. And below it, Brian17 asks, looks like a nice entry and it sailed up for you. How did you manage your limit sell orders? So are you asking, how do you know that the, it looks like he has them in, one to get paid and one to go the distance, Brian. And then this is the best question ever. How did you know that that 1-to-1 would not cause a reversal? And Victor, Gold Star, Cold Beer, Victor said, I did not know. I did not know that this 1-to-1 wouldn't create a reversal. I didn't know that this 1-to-1 wouldn't stop the market. I didn't know that that potential to break wouldn't be fulfilled. But Victor, what you did know is that with momentum and the potential to break and the perfect entry, you're more likely to win than lose. And you bet your money on the probabilities. So you guys that are brand new, you'll never know what the market's going to do. You'll know where it shouldn't go if it's going to be a winner. You know where it could stop if it does go that direction. And guys, that's the magic of what we do. Once you learn these patterns, once you develop that trust, it's amazing. It's amazing. All right, Paul W., got a couple from you. And guys, I try to turn everything into a rule, or not a rule, but a lesson. I try to turn everything into some sort of lesson. All right, so Paul, last zone was not there at the time of entry. Right here, I'm guessing? So we're strong, downside, right? Trend down, triggers down, strong down, and there's that darn 1-to-1. But the question is, Paul, whether the zone is there or not, why did you enter short? Why did you enter short from the wrong side of small triggers? Why did you enter short not trading from a zone, right? So Paul, do you see how your entry doesn't fit any rules? And let's turn it into a bigger lesson. As soon as these smalls roll against you guys, believe that your next trade is the trend trade and that your entry to that trend trade is a close on the correct side of the triggers. And from that close on the correct side of the triggers, Paul, they continue down. This doesn't fit any plan that I've ever given. This is the man, I sure hope it doesn't go down without me. But Paul, you can't take a momentum trade without momentum, right? And one of the biggest creators of heartache and woe is fighting those fast triggers on your 1 minute. So I like that you were thinking down. And this is where, Ron, if bored, sometimes you'll make a particular look attractive. And then Jen tells him to take his beer goggles off, right? Because this was down, because you were bored, you said, well, I'm just going to hope it goes down. And it did everything your indicator said that it should. And it came all the way back to the trend trade. and gave you a virtual no-risk entry to continue the move down. Great stuff, Paul. But your large chart read is spot on. Let's celebrate that victory. Little bit of patience. Once the small triggers roll against you guys, a close on the correct side of the small triggers is your only option if you're following a plan. Once the smalls aren't below the large, you can't look for momentum trades anymore. Momentum's not there. That's when you go to the second entry, that close on the correct side. Great job, Paul. Jump the gun a little bit. And then made 2 ticks on a near wipeout. Quickly appraised as an HVA. Legit short down. Then notice the small triggers were above the large triggers, not below. Not an HVA trade, right? And it's directly into trouble. Or did it come from below trouble? Well, there's your zone. There's your zone. No momentum. And they did. They pushed a little bit. Way to make something out of nothing, Paul. But the large chart, I'm assuming it was trading below the zone when you entered. It's 60, right at the base. Not really. The 1 minute kind of doubled that things were bad, right? You said, I'm going to take it anyway without momentum. And then your brain said, dag nabbit, Paul, Mark's going to give you crap for this. Not really. But what a great way to make something from nothing, to recognize that your entry was a mistake. And then, Paul, the victory here is that you didn't just hold the trade and hope. You said, man, that's not my best look. That's not my strong trade. That's not my outstanding endeavor. I choose to exit rather than hope. Great job. That's heads up trading. And man, that's hard to do. It's hard to get out of a trade. And I talked about this with someone yesterday because that what if monster, right, Paul? That what if monster says, but Paul, what if it goes down? But Paul, what if that is the winner? Paul, what if that is the one that goes the distance, right? And you start going, oh, okay, I'll hold on to it. I'll hold on to it. And you move your stops and you change your plan because what if? You're getting there, Paul. It takes a minute to change speed. So Miss Jen, strong triggers, clear path, pull back to the area inside of triggers. You didn't catch it on the way down because you just sat down. Good afternoon, Miss Jen. And you said, I just sat down. I missed my entry, but whoa, this is perfect. I'm going to get in and make money anyway. Nice job, Jen. Nice job. I struggle trading right when I sit down, but that was the perfect trade. Nicely done. And then odds favorable, 3 triggers through. Does anyone remember what the biggest killer of the potential to break is? We talk about it every day. Nobody believes it. Divergence is the biggest killer of these potential to break looks. Jen says, you know what? I'll take it anyway with a little confirmation, right? She's got a risk in play. And then a second divergence prints. And Jen's like, you know what? I sure hope it goes down. So let's read everything. 3 triggers through, odds favorable, recognizes divergence. She reduces her risk by taking the down bar. If entered higher, it's a $400 of risk. That's great, right? Way to reduce your risk on a less than perfect entry. Second higher divergence, held, rules say get out, broke that rule, stop still remained, and then it still fails, and you get out break even. So Jen, way to trade heads up, right? Way to really manage that based on your chart read. I don't know if you've changed your rules, but that keeps you out of the scramble. That keeps you from having to manage so aggressively. That keeps you from spending money on commissions. Did you change your plan to it's okay with divergence as long as there's 3 triggers? And that's okay, right? And that's okay. And your mind did, you did not. Right on. Our minds are going to get us one day. One day, we will fall victim to our brains. That's where I have an advantage on you guys. The x-rays came back negative. We're not sure that I have a brain. All right, Paul. Let's see what we have. Tell Big how bad that went even winning. Oh, talking about your trade? We'll talk about it. All right, Paul. Not odds favorable momentum, so the triggers don't agree. You reach the zone and the VWAP, and you get inside, and your small chart rolls, and you have momentum, and you buy the HVA. Perfect. Absolutely perfect, Paul. 100% perfect. With strong triggers, buy the pullback, and then you just have to stick with it, right? You make a little money. I like it. Make $100. I'll take $100 all day long. Go break even. And then when the small triggers turn against you, if you're going to try to go up with the trend, there's just no place to go with the mid band. Great trade, Paul. Nicely done. Nicely done. It's an uptrend. The larger up. There's nowhere to go down. Weakness on the triggers. Wait for the 1 minute chart to give you what you need. Rock star entry. Make $100, right? It's not perfect. You're stuck between a mid band and zones, but everything said let's go to the mid band, and it did. Make a little money. Grab a cup of coffee. Come back. Find your next trade, guys. The next trade is always there. The next trade is always coming. It might be 5 minutes, it might be 5 hours, but the next trade is always coming. All right, I think we got all those. Victor says update of last trade, and we've got 2 of them, so let's take a look. That was that fib update that got you. Strong triggers, 3 triggers through, no divergence, perfect entry, Victor. And then the fib update shows up to screw up your good time. Way to get paid. Way to get paid before it fails. Way to use your chart reading to make something from nothing on that chart read. Commission fees will be based on your broker, Paul. If you're in the funding company, it's $5 a round turn. So every trade you take to get in and out, it's $5 per contract. And guys, this was just the little read earlier. And this is what my brain goes through every time I look for a trade. The trend is down. The smalls are down. Transition side of the down. Is there anything in the way? Absolutely. That is a full chart read. So my trading view people, does that make sense? First the trend, then the smalls. Where am I in relationship to the smalls? But most importantly, is there anything in the way that could screw up my good time? And the answer was a resounding yes. 1-to-1s. Even the zone. Do you see the zone dip? It's both of them. That is a brick freaking wall. And let me show you guys what happens when you try to go through that brick wall. There it is. They might make you think you got it. Thanks, Morgan, for the picture. This is how you should feel trading into areas, trading into zones, guys. Look at the license plate. Funny stuff. We can have humor. Day trading doesn't have to always be serious. All right, we saw Steve's Estefania. I just love saying your name, Estefania. I can't say that enough. Let's take a look what you did. Estefania says, Mark, I'm going to hide this one, but I made money. Let me stop you right there, pal. That's how you should feel about those termination conditions, Todd. John Candy. No worries. You still made money. And then everything goes down, and you clear trouble, and you get in after trouble, and you make money. Estefania, you have really done a killer job on this trade. Termination, every indicator down, below anything that could stop them up. Yeah, I love Uncle Buck. And then you wait to get below anything that could create trouble, and you just ride the momentum down. Estefania, it's a gorgeous trade, and this is like the third or fourth that I've seen you taken with this exact look. Make sure you send Ron a Christmas card, guys. Ron C. gave us this trade. Pete. Pete, going trading view. I like it. So what'd you do, Pete? A little zone-to-zone base hit. Smalls rolled down. The trend is up. The smalls are down. You're the weak side of the smalls. Let's just go through it every time, guys. Let's go through it every time. The trend is up, but the smalls are down. With the smalls down, where am I in relationship to the small? I'm on the weak side. Is there anything in the way to mess up my good time? Pete says, with my trigger still down, I've got room back to trouble. He doesn't jump in. Pete, when everything goes stronger to get you back to trouble, you just jump in with momentum and you get out at the trouble. That's great. You're going with the small trigger direction, even though it's weak. You had room back to trouble, but you waited for the 1 minute chart to give you an advantage to get there. Great patience, Pete. Great patience. Nicely done. I don't have a trade plan for it, but it's a great chart read. You did a good job. And I don't say you did a good job because of the win. I say you did a good job because you went with the small triggers, because you had room to trouble, because you waited for the 1 minute to confirm the direction when the large chart wasn't perfect. Great stuff. Paul, what did you do? This is huge. Sell limit at 64.56, exited 36, 37. Did I do the sell limit incorrectly? Lost one, messed up. Put happy with entry exit. Just have to be careful with stop loss and profit. So Paul, this is hard for me to decipher. You went short with momentum, but you went directly into an area, right? So you're in at 36, right into something that could stop the market. So the rules, Paul, say let it break and then pull back. Let it break and then pull back. So I'm not sure how you did with stop because I don't understand the entry again. Where did you put your stop? Did you put your stop? If it was at 37 and you were in at 36, your stop is inside the same zone that you're hoping breaks. I'm not sure you gave it any room to do anything. Guys, great entries create manageable trades. Almost did not post this because the sell limit. See, and I don't know what that means, and I apologize. If you were going to look for a momentum trade, Paul, your sell limit would have been below this zone, and it breaks with momentum. The hope would be that it pulls back and then continues down. And then your stop would belong on the other side of the zone that you're hoping holds. What you did here, which makes it harder to manage, is you are in the zone and you're in the zone scramble and it never breaks and pulls back. It never breaks and pulls back to the zone. So that resist or that support never gets the opportunity to turn into resistance. Does that make sense? Guys, your support never gets the opportunity to become resistance. Let's get rid of some of these arrows. But once it breaks below, Paul, look how it behaves as resistance. Even if it's only fleeting because you don't have momentum. But once the bottom of that zone breaks, then it becomes resistance. And that's such a key concept, guys. That's why we let them break. And that's why we don't just trade them if the small triggers are against us. And then once you get below the small triggers, right at the zone, Paul, look what it does. It goes down. Placing of our own stop loss in the profit target placement is new. Okay. So Paul, let's do this real quick. Let's turn into a stop loss. into a stop loss lesson. And here's a great example, and this is crude oil. And we're going to do a couple of them. So everything is going down, and the triggers are strong, right? And Paul, you want to jump in right here, but your brain says the rules say let it break. There it is breaking. And with strong triggers, sell the pullback to the zone. So Paul, that's your entry. Let me know if that makes sense. And everybody in the room, let me know if that makes sense. Let resistance break and let support break and behave as resistance. So management says, Paul, if I'm counting on momentum to push lower, that zone to stop any upward movement, and this is what I'm thinking when I'm taking this trade, I'm willing to take this entry because of the momentum down. I'm willing to take this entry because support became resistance. So Paul's stop placement isn't a number. Stop placement is, well, if those jerk faces get back above the zone that's supposed to hold it down, I want to take an exit. Does that make sense? So on momentum trades, you're on the other side of the zone that gets you in. So my limit order is low, and my stop is right here. And guys, on a lot of these trades, it might be 6 or 7 ticks. It's not a lot. So that's one stop placement. And then another idea, Paul, is we'll use this for the trend trade. All right. My small triggers are up. I'm waiting for the pullback. I'm waiting for the pullback. I'm waiting for the pullback. And I reach something bouncy. And I get a close. We'll say that one went below the triggers. Well, now I'm saying this is the area that I anticipated holding so that I could continue down. And this bar that bounces off the area that confirms the move down, Paul, I want to be a couple ticks above that bar, right? Because that's the pivot that they put in right at the area is most likely to hold. There's my confirmation on the down move. So if they meaning the buyers, change direction and start pushing up, once they take out that previous high where the sellers took over, I don't want to be in it anymore. So that's another way you can do it. So it depends on your entry. If you're entering on momentum, let the zone, right? If you took that HVA trade right there, the top of the zone, that's where I don't want it to go if it's going to work on the way down. Even if you chose to enter long off this zone, I don't want it to go below that bar that closes on the correct side of the triggers, because if it does, it's not working. So Paul, does that help a little bit? And then there's ideas on management here. There's one that says stop placement. Short trade, stop would go above it, and then when it comes back to the area, stop above the white bar that bounces off the area. Great little stop placement movement. So there's a lot of great examples in there as well. Paul, good stuff. And I like that we're getting a mix of the trading view as well as Ninja Trader. Victor says last trade. Had momentum, 3 triggers through. So Victor, I just want to be clear because guys, one of the things that happens is when I watch you trade and I watch you grow with the software. One of the things that happens is I start to notice when you change your language. So Victor, has your plan changed? Let me know so I can hold you accountable. Have we gone from pullback to an area inside of triggers to pull back to triggers and hope I pick the right spot in the retracement zone? Just curious, because I'll hold you guys accountable all day. So Victor, what inspired the entry? Because clearly that's not holding if it closes above. You're looking for area. Okay. Do you see how the language changes on your annotations when you break your rules? Not my rules, your rules. Guys, you'll annotate something and make it sound like a rule. Victor, I like the look. So what this really was would have been a momentum trade off of that fib if you were going to take it. And it probably didn't work out unless you put your stop where the market shouldn't go. And then once divergence prints, that's when it's over. It's a great look. It's a great read. It's awesome advantages. It's a momentum style trade because it bounces so low. And if you put your stop where the market shouldn't go, it keeps you safe. Does that make sense, Victor? You have momentum and all the potential to break. And you found a way to enter. And I'm not busting your chops on it, right? By entering at the top of the retracement zone, that might not be a bad thing sometimes. On a look like this, where the low zone is just too damn low, you might say, I'll get in the retracement zone, put my stop where it shouldn't go, and see if I can ride with the advantages. And Victor, I don't think that's a bad thing. But if you change your plan, right? If you create a second entry, Victor, make sure, it doesn't matter, your money is irrelevant to me. So what you may do, Victor, is say, if I have one area and it's dissected by the reversal bar, I'll enter because of large chart advantages at the top of the retracement zone so I can have 5 ticks risk on the trade. Pretty cool, right? So this is how plans are built, guys. Plans are living documents. So what you've just done, Victor, is you've created a scenario. We've used annotation to identify the one that did great things for you. Now your job is to go find 50 pictures. And what you may have just done, Victor, is created more opportunity for yourself through your ability to read charts. Does that make sense? English is your second language. So, por favor, mira aquí. No tiene las cosas aquí. Sin dinero aquí. Vámonos. Remedial Spanish, but I can get there a little bit. I like the look, Victor, and I think that very often what happens is we take our ability to read these charts, we take those core examples, right? That very basic methodology, and we start to see great things and more patterns outside of it and more opportunities outside of it. You speak English, Spanish, Italian, French, and Portuguese. Now you're just showing off. I speak kitchen Spanish. Do I ever goes to show the NASDAQ on Renko Pibbies or TradingView? I show on TradingView all day long. I typically avoid NASDAQ on the Renkos unless you ask me to. And then I'll be more than happy to. I'll load that chart right now. But one of the things, Pibbies, is, whoops, I opened the wrong workspace, is NASDAQ on Renkos is insanely fast. And 9 out of 10 times, 9 out of 10 times, it's too fast for anybody in this classroom that's new. We'll open it. I certainly don't mind sharing it. If you're on TradingView, minute bars are always minute bars. I think the NASDAQ is very tradable on TradingView. But I'm more than happy to. So that workspace is opening. And there's a couple little nuances that change the way you think about things. All right. Hunter. Odds favorable. Clear path. Nice entry. Didn't work. Take that one with you all day long. Pete put in a picture, Hunter, that says because this is a weak bottom, be aware of the mid-band, because one of the patterns you guys will see very often in the market my NASDAQ's still calculating. But one of the patterns you guys will recognize a lot in the market is if it's not a termination that reverses the market, very often the market loves to continue down, guys. They know where these fibs are. And when they almost break them and then retrace a little bit, they like to pick up on the fight. But Pete, with momentum and path, divergence is irrelevant. When you've got the recipe, divergence is irrelevant. It takes 3 of them. Hunter, you did it perfect. You followed the rules perfectly. But that's not a rule for this pattern, Hunter. A weak bottom's not a rule for this pattern. When I have momentum and path, the only thing that's going to keep me out of that trade is 3 divergences as a brand new user. And you're in the brand new user plan. You're in the KISS plan, right? That's the one you're using, Hunter? That keep it simple plan? Cool, so check it out. Doesn't say anything about a weak bottom. Now it says if you have a strong bottom, it increases the likelihood of success, but it doesn't say anything about the market has to come from a strong bottom. That fits into that potential to break trade. And Hunter, what got everybody on this trade, and did you guys see this? That fib update showed up, Hunter, 10 bars after you entered the trade. So we didn't get the fib update in time to know that this was only potential from a weak bottom. You took the perfect trade. I can't stress that enough. All right, Victor, it is not... Let's talk about divergence and how it prints. This divergence, so the market comes down, Victor, and then it creates an up bar and the second bar, and you know that that divergence is true right about there. So it's not bouncing off of the divergence, it's actually creating the divergence that doesn't exist until the market is all the way up here. Does that make sense? So it's not there. So if you watch divergence happen live, well, I don't have any potential for it right now. Trying to see if we can get divergence potential, but momentum just keeps pushing the darn thing down. And then Pibbies, this is why the NASDAQ is so difficult for people. Do you see how fast it moves? Let's see if we can find divergence potential. Okay, so look, I have divergence potential right here. But Victor, I won't see a cyan line until the market's all the way up here. Does that make sense? Cool. So you can see the potential, but it doesn't actually present. So like this potential divergence, we won't know about it until the market's all the way up there. That was a good comment. That's one of those lessons that come into play because it affects if you're going to take one of those 50-50 trades that need a strong top or bottom. Good stuff. All right, let me see where we're at here. Dun, 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 dun. Saw it, Hunter. And then Hunter comes back. This is what I love, guys. This is what makes me so happy as a teacher. And then Todd will answer yours too. In the KISS plan, the 13.2, that number, what it means, it's bar structure for the dynamic Rinkos. So 13.2 is, and the reversal bar is the example. This reversal bar is 26 ticks. 13 represents the midpoint of the bar, and it has to go twice 13 full bar to create it, and that's remedial. So 13.2 is a representation of the number of ticks it takes to produce a full bar. 5.1 is the same thing. It's the number of ticks it takes to produce that reversal bar. So all of these bars down are half the size of a full reversal bar. And the great thing, Todd, is you don't need to know that. You don't have to know how the bars are constructed. You don't even have to know how the fibs come to be. I like to do it this way. Instead of calling it a 13.2, I like to call it my large chart, and I like to call it my small chart. And the large chart will define the direction, the momentum, and the path. Inside of this one bar, you're going to see strong triggers, nothing in the way, and you'll know that it's a downtrend because of the red. Does that make sense, Todd? And then check it out. Inside of that one bar is a reversal bar, a pullback to an area inside of triggers, and continuation with the trend. So we use the small chart to refine the large chart. And what Hunter did here, and guys, I want you to really recognize this. Hunter's previous picture. Let me scroll up to it. All right. And this is pretty cool. You guys are going to like this. Strong triggers, clear path, pull back to an area inside of triggers, and it produces a loser. And guys, this loser will mess with your head. This loser will make you question your plan. This loser will make the average human fearful to take the next trade because the last one that fit the plan didn't work. Hunter's done enough study to say, you know what? It's not one trade that defines my plan. It's not the one time that momentum, clear path, and entry fail. It's the 70% of the time that momentum, clear path, and entry prove victorious. And to be able to take this trade so soon after a loser, guys, this is the trust that you need to execute a plan. This is what separates the struggling trader from the successful trader, is the ability to do the same thing, to understand that you'll never understand what the outcome is going to be, but because the pattern can be proven to win more than it loses, Hunter doesn't hesitate. So I hope that that's not awkward being put on a pedestal, but guys, that is trading. That is exactly what trading is. It's taking a pattern, strong triggers, 3 triggers through, pull back to an area inside of triggers, and riding that momentum up. Who was that? Todd P. Great trade. Nicely done. Same pattern. 3 triggers through, pull back to support, inside of triggers, making money. 8 ticks. Strong triggers, no clear path, pulls back to the area inside of triggers, gets out of trouble. Medium probability. Do you guys see it? The momentum is there, but the path is not. The entry is clearly defined with low risk, and 8 ticks doesn't hold for the home run. He says, egads and little fishes, I know what I'm up against. I'm going to get paid quick. I love this. Managing assertively because you understand what you're up against. This is my only hope for everybody in this room. And then with all the momentum, when he gets below trouble, he takes one of Ron's chili dog trades and adds a little extra money to it. Momentum on the large chart made this chili dog make sense to me. Great trading, 8 tick. Great trading. Andy V. Strong triggers, clear path, beautiful entry. Whew, that's a lot of risk, isn't it? Andy, you said you did not trust, would not go where the market should go. So it's a weak bottom. It's strong triggers. It's a clear path because, Andy, the only time that a mid-band is a termination condition, let's just go back to the instructions real quick. There's one time where that mid-band freaks me out. There's one time where I won't trade into a mid-band. And if I go to the termination conditions, the one time that the mid-band behaves as a termination condition is if the large triggers are a full bar away. And guys, that's what we call the gap theory. And the gap theory says that if the market is trending and it hits a mid-band or a fib or a 1-to-1 or a divergence high and the large triggers are a full bar away, it's more likely to close the gap to the triggers. So Andy, on your particular trade, you took the perfect trade. You took the perfect large chart, the perfect small chart, and the only thing is that you could have had a little less risk on that one that didn't work. Hunter took the exact same trade. And then Andy, do you see on this one? Large triggers are not a full bar away. And sure enough, it's a non-issue. I love everything about your trade. It fits the rules. It fits the plan. Everything makes sense except for the bigger stop. And Andy, are you willing? Are you willing to put, what would that be? $400 of risk on your trend trade when you could have cut that risk almost in half? And that's one of the questions that you'll have to answer yourself. The cool thing is, Andy, is if this fails and it bounces, there will be another opportunity. I'd rather lose $150 twice than $400 twice. All right, Pibbies. Right before the background change. What does that mean? So, all right, Pibbies. Did you write anything on there? You didn't. We've got 2 pictures for you. I'm going to go back to basics on this one. I'm going to go back to basics. So I'm going to talk about 3 things on here. So Pibby, I've never said that color is a rule. So that's something that you've created. Color is designed to give you the overall trend. And the overall trend is green, which means that the trend is up. And once you're done with that, Pibby, color's done. What color is the background on the large chart? But it did change. Right on. You know what? When I was 12, Pibby, I did turn 13. But until I turned 13, I still had to say I was 12. And no matter what it did, it was green. The trend was up. But let's go even more. The smalls are down. The large are up. I don't have momentum either direction. Price is coming off of resistance. Only 2 triggers below this one. I don't have a clear path. And you entered short. I'm guessing at the mid-band. Look at the indecision here as well. And Pibby, I don't know what happened after this trade, but if you go back to the very basics, right? If you go back to the very basics, if you go back to, man, if I can have momentum and path, life is going to be easy. You're taking a trade, and that's okay. It's your right to. You're taking a trade that you hope fights the trend, that you hope goes down without momentum. Does that make sense? And that's the same picture. And I don't know what happened. I don't know what happened after. Whoops. It's just hard to find advantages. It's hard to feel like it's worth risking my money if I can't come up with momentum or path. And a lot of times you guys will get paid on lucky trades. And this is, no, it's great lessons, man. And Pibbies, I hope the lessons never come off as negatives. I try to go back to those very core ideas. Termination definitely stopped the market, right? And that's nice. And the small triggers rolled, and that's nice. And you sold a pullback to those small triggers. And Pibby, I'm going to let you in on the other side of this trade. Are you ready? And right now, Jen is going, I know this trade. When a termination condition stops the market and the small triggers roll down, in 2004, Nexgen started saying, sell the pullback to the small triggers. Well, it looks like a pullback to the large triggers on the small chart. Does that make sense, Pibbies? If a termination condition holds and the small triggers roll, sell a pullback to the small triggers. And you can define it typically on the large chart or on the small chart somewhere around the large triggers. The challenge on that one was that fib. But that's a look that Nexgen started teaching 20 years ago when Fibonacci holds. So as a brand new user, I always go back to these things, right? And then once you understand these things, you start to find more. Or you're 20 years ahead. I don't know. It's one or the other. But it's the same concept that Nexgen has been teaching forever. If an area holds, look for it to go the other way. And that's exactly what you did. But I know that you're newer, so I want to make sure that you're just thinking in terms of what's in the way, what's going for me. And then everything starts to smooth out based on those concepts. If you had written on your chart, termination condition holds, small triggers roll, sell the pullback, try to make a couple hundred, rock star. But you may have, because you're so darn smart, lucked into it. So we get to talk about it. And guys, conversations fix everything. Conversations create new concepts. Conversations are just amazing. All right, so Pete, strong triggers down, room to get to trouble, pulls back to the mid-band. You get in on the way down, and you ride all that down. So here. Well, there are no good or bad trades, Pibby. There are no good or bad trades. If I'm baking a cake and I screw up the recipe, but it still tastes good, I didn't follow the recipe, right? So every trade can be described, I think. I think you guys can give me any chart, any read, and I could give you a reason to enter the market. True story. But here's the deal. And guys, I want you to take this to heart. And Pete, this is amazing. I love it. Everything says down. Pull back to zone, mid-band, HVA. Don't just jump in. Get in on the down bar and ride it down. Great trade. So on crude oil now. Oh no, hold on. I lost my Ninja Trader, Brian. Give me 1 second. Can you show me a picture of what you're talking about while I reload charts? And that's always the easiest way. The easiest way is to always show me a picture of what you're looking at instead of forcing me to imagine, because I've got a crazy imagination. I'm reloading NinjaTrader right now though, so let me get that up. And that's S&P. So I'm going to close this one while I don't have data. And I'm going to get my live data going. And we'll open up crude oil and see what you're looking at, Brian. You say there are 1-to-1s at 64.10 on the 5-1 chart, but not the 13.2 chart. What do we make of that? That is an awesome question. That is an awesome question. So yellow 1-to-1s are 100% Fibonacci alternates, which means for this yellow 1-to-1, no, it's okay. You'll get there. I want you to practice them though, Brian, because if you really want the best feedback and you want to get through this learning process sooner than later, you posting your charts is going to make a huge difference. So this is your 13.2. And guys, here's a little bit about how 1-to-1s are born. On your 13.2, the market goes from here to here. And we're going to call that an A pivot and a B pivot. And your software recognizes this on its own. And then it goes up and it creates this pivot. And this is your C pivot. Your 1-to-1s, and let me do the recipe here. And I'm kind of proud of myself that I know this one. So from A to B equals C to D. So the distance from C to these 1-to-1s is equidistant from A to B. So what happens is they print these 100% Fibonacci alternates because people love to use them for targets and bounce points. Does that make sense, Brian? Now a 5-1 chart is going to have different size swings. And a 5-1 chart is a smaller move. So these Fibonacci's are from A to B, C pivot goes in, and this is equidistant to this. But look at how many swings are on a small chart. So we're not using these 1-to-1s as a potential termination condition. We're using the large chart areas. Very often these 1-to-1s on a small chart, if the rules are met, will give you a nice bounce back to an entry. So momentum is defined on the large chart. Trouble is defined on the large chart. Anything on a small chart, we'll use these 1-to-1s for entries if the rules are met. We'll use these 1-to-1s. Do I get one here? Pull back to an area inside of triggers. These 1-to-1s qualify. Yeah. So knowing where the rules are met kind of helps you out on these. But the divergences will be different because they're from different pivots. The 1-to-1s will be different because they're from different pivots. Pretty cool, right? The same way the large and small triggers look different because it's from a different, faster time frame. And that's where I always say, let's go back to where the rules are met so we have an idea. Good question. Great question there. But see how the large chart says that you don't have strong triggers and how the large chart says that you've got nothing but trouble in the way? Brian, talk about absolving yourself of the burden of overreading. My rules aren't met. I don't care what the large or what the small chart says because I want those large chart advantages, and then once they're present, that's when I'll start looking for ways to make money over here. Great question. Great question. All right, and let's see who's next. Pete, I think we got you, right? Great looking short. Great looking short, Pete. And then Andy V. And there it is, right? Oh, you did move your stop. I love it. Followed the plan. And it's a bummer when it goes up, right? And it it's a bummer when this happens, Andy. And I think that you took the same loser as a lot of people in the room. Had to release the cacklins. And I think that a lot of people took this loser and they took it with you, Andy. And the great thing is we saw somebody else take the exact same loser with the exact same entry, with the exact same stop, which means that you guys believe in the plan. But you will second guess yourself every time a trade loses. I'm just telling you right now. You will second guess yourself every time a trade loses. That's why I think this spreadsheet is so important. And I'm going to pull this off so that we can just get them. But I want you to see this. Strong triggers, potential to break, pull back to areas inside of triggers. Produces a winner. Let's go the other direction. Uh-oh, that one's no longer available. Sometimes people kill their links. I should clean that up, right? Strong triggers, clear path, pull back to an area inside of triggers. Strong triggers, clear path, pull back to an area inside of triggers. Do you guys see it? So it's not that one darn loser. It's not that one loser. It's those 40 winners, guys. And losses are a normal part of a positive equity curve. I hate losing. I hate losing in everything in life. I'll tell you right now. I'm not the best loser. It frustrates me. But what I do, when I lose, I figure out what it's going to take to win. I figure out how the hell I'm going to stop losing and win more. And that's what the patterns are. Miss Claire, can I help with the read? You're darn right I can. All right. Are you with me, Claire? Because if you're not with me, you're against me. Not really. Here we go. So we're going to go back to, and Claire, have you seen this picture yet? Large chart trigger read. So we're going to go back, guys. Every time you give me a trading view chart, we're going to talk about the direction or the color of the background. What direction do the small triggers go? Where am I in relationship to them? Have I hit anything that could ruin my good time? So, Ms. Claire. And I love this. Blew through. Yeah, they did, right? So when you're curious about the read, are we asking about the read right here? Are we asking about the read when it blew through right here? So let's do this. And let me try and line up some numbers. Okay. 6405 is right here, Claire. Do you see it? 6405 is right here. Smalls are down, large are down, trend is down, and you had room to trouble at 6405. Claire, look at your small chart. Odds favorable momentum. Do you see it? So the large chart says down, down, strong, nothing in the way right here. Small chart says, hey, look, we're coming from that zone that held. That happened right here. My small triggers went below my large triggers. Odds favorable momentum. That's amazing. And do you see how it pulls right back to that pink HVH, Claire? This is your rules-based entry. This is your HVA trade. And it's also a perfect momentum trade. But the question is, but Mark, why did they blow through all of this stuff? Right, Claire? Why did that area not stop it? Why did that area not stop it? Why did that not stop it? So Claire, here's the part you're going to hate. And please don't be mad at me. There's your answer. Why did it blow through? Because the sellers wanted it to. Because the people that control the market poured so much money into going short that it blew through everything, Claire. How's that for that sobering I'm not in control feeling? But let's look at the other side of it. Claire, if you caught that trade, aren't you thankful the sellers wanted it to go down? If you got in with strong triggers at an HVA, you might have gotten paid at this and been, wow, this is awesome. I made a few $100s. Life is good. And then you're like, well, shit, it went further. You never know, Claire. You never know what the market's going to do. You never know if that zone's not going to hold and they're just going to drop like a ton of bricks. But if you made money from the rules-based entry, and maybe you took one contract off here, and you said, with all of this momentum, I'll force my large to roll, right? Or every time it gets below the zone, I'll put my stop above the zone. And once they get below the zone, I'll put my stop above the zone. And if they get below the next zone, I'll put my stop above the zone, right? And maybe you can take advantage of it. But the real answer is where the trade was met, where the rules were met, was outstanding. And then the sellers just took over with a ferocity that we could have never predicted. We're just not in charge. Does that make sense, Claire? Did you see the HVA trade up here? It takes a while to get it. Yeah. So unfortunately, we're just not in control. And here's a great example. The buyers didn't want the market to go back down. So even with weak triggers, they broke through areas. And even without rules met, they broke through areas and broke through areas and broke through areas. And when the buyers finally got to where the buyers wanted to get, and it's not a coincidence that it's right at Fibonacci, they said, all right, we're done. Sellers, it's all yours. And then somewhere right at Fibonacci, the buyer said, we're just kidding. We want to go back up. But look at this. The sellers took back over right where they got control there. Not a coincidence. Not a coincidence that the momentum went away. And then the seller said, here we go. And the buyer said, well, that's a blue fib. We're going to fight you. And the seller said, go to hell. And they pushed down. And they couldn't break through the buyer's line in the sand. And the buyers push up, but the sellers weren't done. And that's all it is. Guys, all it is people with more money, power, influence, probably better dancers than all of us. They control the market. But what we can do is we can start to recognize patterns that win more than they lose. I don't have to be in control. I don't have to know what the market's going to do to be successful in the market. I have to find a pattern that provides an edge. And once I do, I have to stick to that pattern like my life depends on it. Great lesson. Great picture, Claire. I hope that was helpful. Victor, waiting to get past trouble. Divergence just printed. Now everything may change, or it may not, right? This is the cool thing. This is the cool thing, and I love this. And Victor. So can we go through Victor's chart? Victor had momentum. Victor did not have a clear path. And I want you to see what Victor had. Victor had absolutely no clear path, only two triggers through, only 3 triggers through, and divergence on the small chart. And Victor said, wait a minute, I've done a lot of study, I've put in a lot of practice, I've taken some great coaching because the coach is amazing. Who hired this guy? There's a better chance I will lose this trade than I will win this trade. And Victor said, I'll sit and wait. Some of you went short right here, willing to take the chance, and you lost. Did you lose because you thought you had an edge, or did you lose because you were tired of waiting? That's the question that you have to answer. Victor, I love everything about this chart, because even though you didn't take a trade, you talked through your rules, you recognized troubles, and you said out loud via texting, this doesn't fit my plan. I choose not to take it. Great job. Pete, the trend is down. The smalls are down. At 25, you are in a transition on the small, but you're getting below trouble with strong triggers. Sell the zone and take it to the next trouble area. And Pete, awesome job. Do you guys see it? And then Pete, can we assume that your stop was somewhere above the zone that you were expecting to hold? Because of the downtrend, because of the triggers, because of the pullbacks, support becomes resistance. There's your momentum trade, guys. And then just off at the next zone. Why not? Get paid. Great job, Pete. And your entry is on the good side of those one-to-ones. Nicely done. Miss Jen, 2 triggers through. Odds favorable momentum. No divergence. Entered and put a lot of hope on it, right? Could have been a lot less. And the mid-band's right at the top, Jen. So if you choose to take this trade, right, 5 ticks max. 5 ticks. If they blow through there, it's just not your trade, especially with only 2 triggers through. So it's only the potential. It's not the best potential. Super low risk. Why not? Take a shot. Just no reason to put that much on it. And it's still not much. 2.5 points, 3 points. Well, maybe it is. That's a $300 loss. That could have been a $100 loss, right? So about $200 more than it needed to be. That's okay. What a great lesson. If it's not perfect, do you want to put the maximum amount of loss on there? And maybe it happened so fast you couldn't move your stops. But you know where stops go. And you is for everybody in the room. You'll know where the stops belong. You'll know where your advantage is over. And you will learn how to take that loss with a smile on your face that it's only $100 and not $300 because of your plan. It was a good shot. Just didn't work. All right, let's do some large chart reading. It's still weak triggers. It's still not a clear path. They made you believe that they wanted to go. 2 divergences, no clear path. We're on the wrong side of the triggers. Guys, this market could still go down. I can't find a reason to take a short trade because when 2 out of 3 of my advantages are gone, I know it's low probability. And it's hard to convince yourself that trading low probability is your path to success. I forgot that I crashed. So while that loads, let's look at NinjaTrader. This is the NASDAQ, ladies and gentlemen. The trend is down. The small triggers are down. Price is trading on the weak side of small triggers. So that is not my best. I reached a mid-band, and let's see what the small chart said. The 1 minute said, check it out. There's a zone that could stop the market. There's a zone that could stop it. Now the small triggers are up. Can't fight, can't fight, can't fight. If I'm looking for a trend trade, my rules say I need to close on the correct side of the triggers, of the small triggers. I also need room back to anything that could stop my forward progress. And guys, with odds favorable momentum up, the top of this zone could stop your forward progress. Does that make sense? And if you get in with a close on the other side, that mid-band is right there. So first we let the large chart define the direction. We let the large chart triggers define whether it's really strong or if we're on the weak side. And then we ask that ever important question. Is there anything in the way? And if there is, do I have room to get back to it? And even more importantly, do you guys see odds favorable momentum to the upside? Strongest of the strong, best of the best. Your 1 minute is going to struggle to change direction. Todd, I don't know if concerned is the right word. So where do I have one-to-ones that you don't? And you said you did reload history, data, tick replay is checked. Ninja Trader, I'm assuming, Todd. Are we talking about Ninja Trader? So I have one-to-one somewhere where you don't. 64.15. Let me go back to crude oil. Let me get off my untitled workspace. Sorry. This could be, Todd, because there's like one tick difference in our data. Sorry, Todd P. I've got two Todds working right now. This morning, one thing that I did, and this may be the difference, Todd. One thing that I did this morning is I went to my database management and I reset my database and I repaired my database because I had an order that was hanging. And that may be the difference between the two of us, is I had to do a full reset and repair, which means that you may have some lingering data that I completely cleaned out. But I always encourage everybody, trade your charts. Trade what you see on your charts. My charts get changed a lot. My charts get pushed different directions, get indicators pulled, indicators added. I draw on them a lot. I crash Ninja Trader 5 times a day during class because of all the time I spend on the charts. So I encourage you guys to trade your charts. But here's the beauty of it, Todd. Did you have the divergence? So you still had weak triggers at a termination. Whew. So even without the one-to-ones, you still had everything that you needed to say that market is at a place where decisions are made. Thank goodness. So sometimes it works out. Yeah, trade your charts. Mine change a lot. They really do. All right, Todd N, is the straight magenta the termination zone, or is it the other curvy magenta? So Todd, let's go through. Are you new to TradingView, or are you just new to Nexgen? And I like both answers. New to Nexgen, cool. So on our indicators, I'm going to do the full run. So you've got trigger lines, small and large, fast and slow. And let me drop this in too. Just since you're new to Nexgen, there's your indicator descriptions. But what you're seeing is there's actually 3 places. Where's my divergence? Where pink lines come in. The first one is going to be anytime you see that pink line off of a pivot. So if the market goes up and down, I'm going to make this just a little bigger. You'll see that pink line at a high, and that's divergence. That's a loss of momentum. And that loss of momentum just means that the buyers were in control, the sellers told them no more, stole their momentum, and the market goes down. So that's one of the pink lines that you'll see. Another one of the pink lines you'll see are the dots. And you'll see them as dots, not a solid line. And those dots are small swing one-to-ones. They're 100% Fibonacci alternates taken from smaller swings within the bigger moves. These are areas that could stop the market, that can behave as termination conditions. Divergence highs can stop the market, can behave as termination conditions. The curvy one that goes from magenta to green, this is your mid-band. And the curvy one on the smaller chart is where we're looking to enter trend trades. So the curvy one on the smaller chart, when the large chart says down, what we're looking for, and let's find just a good looking trend trade here. When the large chart says down, when the large chart says nothing in the way, we're looking for that pullback to the mid band and then closing below to go with the large chart trend. So the mid band is one of your entry zones. And when you look at the TradingView plan, it'll tell you where entries are taken from, and that mid band is from trend trades. And then the other two pinks, whether it's divergence or those one-to-ones, we're going to lump those into areas that could stop the market's forward progress. Does that make sense? Great question. Awesome. Great question. So the way we're going to do it is, what's the direction? The direction is down. What direction are my small triggers? They're down. Price is left of the small triggers, which means it's on the strong side of the small triggers. But because the triggers on the 1 minute chart aren't strong down, because the smalls have turned up, because the large are up, the trend trade, we wait for that immediate momentum to get us back to that mid band. And then instead of jumping in on the wrong side of the triggers, you can enter with a close on the correct side. And that's exactly what I did. When it closed on the correct side, it shows my entry on the next bar because my reaction time's not that fast. But that's your short trade. And then getting paid at the areas that can cause trouble on the small chart works out beautifully. Welcome to Nexgen, man. Do you have this trade journal yet? Because there's a lot of great looks in there. And that spreadsheet, all it is it's just trying to take repetition. It's trying to take that repetition of seeing the same thing over and over until it becomes easy. Good stuff. Great question. And let me see where we're at. Pete, did I get you here? I did. Great momentum trade. Jen, did I get you? I did. We made it through all the pictures, ladies and gentlemen. What's the large chart saying? What's the market telling us right now? Weak triggers, a determination for the win. Do you guys see it? If you tried to pull one over on the first trend trade, they let you get away with it. If you tried it on the second trend trade, you probably got stopped out. If you tried it again, you got stopped out even bigger, guys. The rules are based on hundreds of pictures. Termination, guys, 1-to-1s to the tick. Support holds, resistance holds on the retracement. The divergence low, no triggers through, pushes it up. Do you guys see it? So where are we at now? Live. This is the S&P. Termination reverses the market. That's a great look. Strong triggers. That's a great look. Only 2 triggers through the divergence low. Only 2 triggers through the Fibonacci support. And I've already got divergence printing on the smaller, faster chart. Has anyone been in my class long enough to know what the biggest killer of trades that only have the potential to break areas is? It's divergence. But what happens if the market goes down anyway, right? Could it be divergence for 200? What happens if it goes down anyway? Does it mean that that divergence isn't effective? Does it mean that your plan is no longer valid? Or does it mean that that would be the exception, not the rule? 2 triggers, it's damn near 1 trigger breaking through. Losing momentum, no clear path. And guys, avoidable losses. It's all about avoidable losses. I feel like I have a crystal ball now that I can read my indicators. Avoidable loss. Did anybody get bored and take it anyway? Did anyone say, I'm sick of waiting, I'm taking the short anyway? F them rules. I've done it. If you do it, you're not a bad person. Strong triggers, weak side of the smalls, absolutely nothing in the way. Because my small chart, small triggers are up, my job as a rules-based trader is to wait for the market to come back to a zone, to come back to a mid-band, and when it gets there, I need a close on the correct side of the small triggers. Does that make sense? Trend is down, smalls are down, I'm on the weak side, well, transition side, and there's nothing in my way. And here's the kicker. My small triggers are up. I'm not going long against this look. I'm patiently waiting for the market to come get me, and we'll see if it does. TradingView users, does that make sense on the large chart read? The trend is down. The triggers are down. The triggers are strong. And I'm kind of in that transition versus weak side, depending on what happens. My rules say, my plan says, once these small triggers turn against me, I need to wait for an area that gives me room back to treble, and then a close on the correct side of the triggers. So we'll see how this works out for us. You guys just want to watch this one live and see if it sets up? Okay. And here's the kicker, ladies and gentlemen. I don't know if I'm going to get an entry, but I've identified my advantages. While we wait, do we set up our trades execution? When you say do we set up our trade execution? So since I'm waiting for a close on the correct side, I'd have to hit the sell button when that happens. If it were a momentum trade, I would be able to click and activate a sell limit. When you say set up your trade execution, do you mean like stops and targets and all that good stuff? Yeah, so when you enter a trade, okay guys, hypothetically, this is not a real trade. If I go long here, I've got a profit target, which I can slide out, and I've got a stop loss that I can put where the market should not go, right? And guys, this isn't a trade. This fights everything. My large are down, my smalls are down, my large are down. There's nothing in the way. Everything about this market says down, and sure enough, it goes down. I just didn't have rules met. But you can put those in place, Todd. When you enter the trade, it takes a fraction of a second to get it done. So guys, if the market didn't pull back to an area, didn't give me a close on the correct side of the triggers, does everybody recognize that no matter what I wanted to have happen, my rules weren't met? And because my rules weren't met, I'm not in a trade. Because my rules describe a pattern that I can prove wins more than it loses. My rules describe a pattern that gives me an edge. And that's all day trading is. I don't know if I've mentioned that. Day trading is about having an edge. It's about recognizing strong triggers. It's about seeing where price is. It's below trouble. Here we go. But because I don't have momentum, guys, there's no short trade here. And now we're getting back above that trouble. There's no room. There's no room to the trouble. But look at this. Strong triggers. Transition dip. This is a good one because even though we got there, do you see that the triggers turned? That it pulls right back to the mid band? There's your close on the correct side of the triggers. And once you get that close on the correct side of the triggers, guys, let's just extend this box down to where trouble is. That's the distance you had to get back to the thing that could stop the market. That's your trend trade right there, right at the mid band, close below, and it went all the way down, not only to the trouble on the big chart, but to the trouble on the small chart, and that is where forward progress was impeded. We didn't get the setup on the NASDAQ, but we did get it on the S&P. Crude oil. Smalls are down, trend is down, strong side of the smalls. Don't have strong triggers anymore because the small are up. My job is to wait for a pullback to the mid band. Guys, give me a Y if you see that it didn't give you a close on the correct side of the triggers. And when it finally does, that's when it starts down. And it goes right back. And I reversed a lot on this one. And then it came back up into the mid band and closed on the correct side and didn't go. And then they just dropped out of bed. But it all starts with the large chart. NASDAQ still has not broken the trouble area. Do you guys see it? NASDAQ still has not gotten below that zone. What does that tell me? Somebody's there and they're pissed off about the down movement. And guys, when 1-to-1s are in a zone, it's even more. But so let's go through. What are our scenarios? There's two potential scenarios right now for trades. The first one still is that we get a pull back to this area and get a close on the correct side of the triggers. The second scenario is that this market decides to break down below support, support becomes resistance, and if I have strong triggers on my small chart, small's below the large, I can sell a pullback to the zone with a stop just above it. That's your momentum trade. And if I do, I have to recognize this is my first area of trouble. So two potential scenarios right now. And it looks like they're going to pull back to the mid-band, to the 1-to-1s, to the zone. 90% of your day is doing nothing. 90% of your day is waiting for the market to give you exactly what you need to be able to capitalize. That's the best lesson. People always ask me, Mark, what's the best advice? I don't give trading advice, but the best lesson I can ever give anybody in this room is have a plan. Know what it means to have your rules met and commit to following that plan. Patience is huge, Brian. All right, are they going to get us back to the trend trade? Look at the large chart. Does it say anything but down to anybody in this room? I see nothing but down. I see large down, small down. I see space between the two. I see nothing in the way. The only thing I don't have is a rules-based entry yet. And if I entered below the triggers here, not from my rules, I got stopped out. And if I tried it again, I got stopped out. So guys, I am hoping, wishing, wanting, and praying that they can come find me. Because that's what my plan says. My plan says they have to get up here or they have to break here. And those are my two options. And until my plan is true, guys, I'm stuck like Chuck. Some of you are going to say, but Mark, you're not making money right now. And some of you are going to say, Mark, way to not lose money right now. What if I go like this? Look how sideways that is. Pretty cool, right? So I don't set the entry dip. Great question. My rules say, let me find the pictures from yesterday. My rules say if I get a pullback to the mid-band, my entry comes from a close on the correct side of the triggers, of the small triggers. And I took, oh, here we go. I know where I put them. One second. I'm going to show you the two pictures. And I added these to the trading. So for a trend trade dip, check it out. Because the small triggers are down, my job is to wait for the close on the correct side. Does that make sense? So I'm not activating a sell limit. If I activated a sell limit here, I got smoked, right? So the close on the correct side gets me in with the good juju. Now the other look is if they break that zone and I have strong triggers, that's where I'll activate a sell limit dip. That's where I'll say, man, I triple dog dare you to come retest that area that broke with these strong triggers, and I'll enter with a limit order right there. So understanding whether you're taking a trend trade and the small triggers have turned against you, or whether you're selling or buying the area because of strong triggers in a momentum trade. It's two different kinds of entry. Only one of them uses the limit order. The other one needs the close on the correct side. And guys, you're just watching a fight right here. Does that make sense? Is that good? Cool. I see. Got it. Whew. Who's tired of waiting for their rules to be met? They're starting to break. I need strong triggers. So check it out. If they continue to break below, and I'm already below, if I get my small triggers below my large triggers, guys, and they pull back to this area, dip, that's where I would wait with the sell limit. But I don't have strong triggers yet. Crude oil, down, 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 down. I'm not through the zone. All right, TradingView users. Pete probably caught this one. You see that green box? Triggers are down, and at that green box, we're below trouble, strong side. Strong triggers, the market gets below what was behaving as support. Sell the zone, take it to the next form of trouble. Dip, Todd, do you guys see that? Everything says down, and where this trade happens, you are below the trouble on the large chart. Strong triggers, sell the zone, come back. Guys, it's going to take a little bit of time to get comfortable with these looks. It really will. It's going to take a little bit of time to believe that you don't have to trade into a zone. Look at where your price is, Pete, or Paul, I'm sorry. Do you see how price is trading below the midband? I'm below trouble. Hear man not complain no more. So Pete, when I'm looking to get below something, there we go right there on the S&P. Do you see how price is trading below trouble? Below the thing that could have stopped it? Now, if I'm going to take an entry, Pete, I don't want price to get back into that trouble spot, right? So a momentum trade, if I had momentum, makes sense off the zone. But once price starts trading back above the trouble at 63, was it Paul? I'm sorry, Paul. Guys, I got too many Pete's and Pauls. I'm looking all over the place. And now I've got a Pibby. Does that make sense, Paul? Does that make sense to everybody? I'll stop using names. So if you're looking for an entry, you don't want to see it get back above that trouble, that thing that could stop the market. Because what happens, guys, is it's a 15-minute chart. And you see that tail? They tried and failed. Let's see if we can find another one. They tried to push and then they failed. And look at these tails right here. 1, 2, 3, 4, 5, 6 efforts to get to the other side. And none of them made it. This is a great lesson. So if you were waiting for entry rules, you'd want to take an entry above that zone. These tails tell a great story. So we're triggers down, weak side of the triggers, and 63.25 represents your line in the sand. 63.25 is where you don't want your entry to come from above because it puts you back above the divergence line. See you next week, Miss Estefania. Great having you. Good stuff, guys. Good stuff. Pete. Everything says down. You just jump in directly into the zone. The entry would have been the pullback. And then there's your second chance. And you get out of the zone. So, Pete, you're starting to develop your own version of the chili dog, I think, is what you're doing here. All the momentum, jump in, let's go. And I think that's pretty cool because I haven't done the study to create a chili dog yet. So it's kind of neat that you're working on that. All right, like 20 years ago, but I wait on this second trade for trending to continue. Second trade enter a little bit late, but more confirmations. Here I have small triggers long. The large triggers are up. The small triggers are down. But you did see the fib, which you start to love it a lot because you know it will get there, huh? You know it'll get there. I love this. That's crude oil. I know it'll get there, guys. Have you met me? I can predict the market. Did you sit through all the shenanigans? Well, I don't have your fib. What was your price? Your price was 87. Nope, this is the wrong market. Hold on. There we go. Is that it? Termination. Everything rolls. It's starting to get below trouble. It didn't quite get there yet. And that would be the only thing, Pibby. I like this. I'm looking at the wrong market. There's your termination. Look at where your triggers are. Everything is below those 1-to-1s, guys. The basic laws of termination say those 1-to-1s are likely to stop anything and the market's more likely to go down. And Pibby, your entry was right over here at 07. Which is, oh, and I love this. Pibby, you entered the market with momentum below the thing that could have created a bounce. And you're looking to ride it down to the fib. I love everything about it, man. When terminations hold, when every indicator agrees, you guys are going to find a way. It took me a second to talk through it. Pibby, the only question that I would ever ask on this trade, did you see the divergence low? And did you say that divergence low could mess up my good time? Did we lose them? Maybe left. So guys, when you see these areas, just say, it could mess up my good time. Look at his chart. His good time never even flinched. The whole reaction off that divergence low was a 1-tick tail on a 5-1 chart. That was the entire reaction. No reason to exit, and it went straight to Fibonacci support. Nice job. So I'll argue you didn't know that it was going to happen. But every indicator said that was the most likely outcome. You had an edge. You had an advantage. You hopped on that edge and took it all the way down to trouble. Nicely done. Great job. It's like Henry and Karen Hill's wedding when Paulie says, too many Peter and Pauls. I get confused myself sometimes. Yeah, I love that movie. Nice one, Pibby. I'm not even sure you're here to listen, but sometimes you guys ditch me. Good fellas. Never got above that area, did it? How cool is that? Never got back above that trouble. Strong triggers. Odds favorable. Bouncing off an HVA line right now. Well, they did break, right? They did break. Large chart won. 1 minute didn't give me what I needed. Strong, nothing in the way. Strong. That HVA represents the point where the market is most likely to bounce down. You could just set it up and see if they get you. And then once they start down off the HVA, we can reduce risk a little bit. But guys, this is your momentum trade using the HVA. Oh, they hit me, didn't fill. My initial stop's going to be a little bigger. If they get above this zone, I don't want to be in the trade. But I've got momentum. I've got nothing in the way. I've got a zone with strong triggers. I've got an HVA with strong triggers. And my stop has to go where the market shouldn't. So now we're at the mercy. Now we're at the mercy of the market. And guess what? They just killed us. It happens. So it's not about triggers through a zone on the 15. It's more price. Yeah, Paul, because it's just too big. All right. So we lost that one. What's our next trade, guys? Pull back to a mid band, pull back to a zone, small triggers are up. I gotta wait for a close on the correct side of the triggers now. I don't mind taking losers, guys. It's simulator. We're trying to work through stuff. They went where they shouldn't. That's it. Same thing. Pull them back right to it, right? They are rascals. It happens. What's it look like over here? Weak triggers, right? Absolutely no momentum. They tried and fought. They tried and fought. They tried, and finally the third fight wins. But here's the question again. With a clear path, that wasn't it. That was, no, they never gave you a clear path in an entry there. Sometimes, guys, sometimes we have to do nothing. Sometimes we have to sit on our hands. Price reaches, Fibonacci resistance, all my triggers are below it. Termination condition still holding. Now we're pulling back to the zones, pulling back to trouble. I've got strong triggers against it. The brain reweld. All right, so now we have to ask ourselves again, guys. What direction is the trend? It's down. What direction is the momentum? It's down. What do the small triggers say? Down. Where am I in relationship to the small triggers? Weak side. I'm not taking a momentum trade. I don't have momentum. I took the momentum trade. It failed. I'm hoping it turns into a trend trade. Pulling back to the midband. The rules say if we reach the midband, I need a close on the correct side of the triggers. Does that make sense, guys? Does it make anybody uneasy that the guy teaching the class took a loser? I hope it doesn't. I hope that you're learning by now that you will lose trades. Lose the right trades, guys. Lose the trades where you can go back to a checklist and say, man, I had the advantage. That was my look. And it's not about one trade. And guys, you'll even have losing days. You really will. You'll have days where you're like, okay, I've just got to shut it down. The market's not giving me what I need, or I'm breaking my rules, or things aren't doing what I need to do. I love this countdown timer, guys. This countdown timer keeps me patient. I've got 36 seconds before I'll know whether or not I have a close on the correct side of the triggers. I've got 29 seconds before I'll know if I have a close on the correct side of the triggers. 20 seconds. On ES, you now have momentum up, nothing else, no triggers through, trouble, no need to pick entry areas. Wait and see if the triggers cross. I love it. Close on the correct side of the smalls, Pete, because the smalls are my immediate momentum. And look what happened. If I tried to predict it, my prediction was wrong. I didn't get my close below. Guys, remember when I said you'll recognize what your thing is? You'll recognize what your challenge is? That is my challenge, and I'll share it with you guys. Trying to predict a close on the correct side of the triggers instead of waiting for a close on the correct side of the triggers. So we've got 34 seconds, guys. 34 seconds to sit here, to do nothing, to wait, to see what happens. I've heard people say, but Mark, if I wait for the close on the correct side of the triggers, I miss the trade. The risk is too much. Well, if the risk is too much, don't take the trade. Where's my first sign of trouble? It'll be this zone. We'll know in 10 seconds, guys. 9 seconds, 8 seconds. 6, 5, 4, 3, 2, 1. There's the first time the market closed below. Put my stop where the market shouldn't go. Let's see if they go to trouble with a close on the correct side. Took me out at 150, but ended up going further. Where did I mess up? I don't know. Where did you enter? Where did you exit? How would I know that? At 10:45. I don't even see 10. Okay, so you got in right here. And I don't know where on that bar you got in. Probably just above it with momentum, right? Zone creates a bounce, zone creates a bounce, zone creates a bounce. Then it goes down to the outer band. Outer band creates a bounce, turns into a trend trade. And then it goes down, and your trend trade worked all the way to one-to-ones, all the way to trouble, to the weak side, and out you go. So, K price, I don't know. Maybe you just refuse to get paid because your entry is outstanding, and you knew where the market may bounce, right? Is it okay, K price, to get out, get paid, and then just get back in, maybe at the trend trade, and then get out and get paid, and then get in at the momentum trade? And then get out and get paid and maybe wait for the next trade. And I think that's the difference. Oh, look, guys. It worked. Being willing to get paid, right? Waiting for the best entry. Putting your stop where the market shouldn't go. Understanding areas that can stop the market. Guys, we're up. There we go. Winner, winner, chicken dinner. And it may still go, right, Claire? But I knew where trouble was. Is anybody pissed off about making $500 real quick? And here's the best part. Here's the best part. Rules not met. 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 Rules finally met. Payday. Can you do nothing if the rules are not met? How many of you have $400, $500 goals for the day? That was it right there. That was your goal. That was $240 per contract in that tiny little window. Todd, M, do you see it? Dip, do you see it? And it might still go, right? But how long did we wait for that stupid trend trade? And it came, didn't it? That's what I want you guys to get. It's going to show up. It's going to show up. Your momentum trade failed. It happens sometimes. I made everything back. And if I only took one off at trouble, guys, I'm still holding because my large chart says down. And then once I break below the thing that could cause trouble, maybe I move a stop, get a close below, right? And I'll take one off and I'll protect myself and I'll work on management. But that is the patience that pays dividends. What a great way to end the class, guys, with a $450 winner that fit the rules that I teach every day live in this room. All you have to do is ask questions, post charts, get feedback. I'm here for you. Dip, do you feel a little more comfortable today? I feel like we got some great examples of the things that you were probably wondering. And I just want to reiterate one more time. So you can take a trade even if the faster triggers are above the slower ones? Absolutely. And here, let's talk about it real quick. Why did we take the trade? Because the large chart said down, right? The large chart, smalls were down. The large chart had nothing in the way. And even though we're on the weak side, it's all still down. I'm looking for a short. Are you with me so far, everybody? The second these small triggers turn up. So when the smalls turn up, momentum trades are off the table. Large still says anything other than shorts is just silly. So now I don't have a momentum trade anymore. And my immediate strength, immediate, in the now, says up, right? But it's short term. Never lose sight of the big picture. So one of the biggest ways to drain an account is to fight these small triggers. That's like the super immediate momentum. That's why we have the trend trade rules. The trend trade says, I hope the momentum pushes me back to the midband. And I don't want to fight the immediate momentum, so I'll get on the closing side, on the bad side of the immediate momentum, so that I can go down with everything that the large chart says. So those strong triggers up got us to our entry. The close on the correct side of the smalls. So what you're thinking of, Dip, is the momentum trade that says, with everything down, with nothing in the way, if we can get price to break through this area a little bit, let's see if we can get a break. Right now, it's just stalled out right at 1-to-1s. We didn't get a break yet. With that momentum, we'll just do it up here. That's when you would sell the area with everything strong down. So it's two different kinds of trades. One trade is a momentum trade that requires everything down. The other one is a trend trade where it just buys you some patience on that push up. So there's the pullback to the 1-to-1s. I have strong triggers. This would be one of those times where if you entered on the pullback, it shouldn't get above that zone if it's going to work. What's the challenge on this one? Well, small triggers just turned up against us, but we're already in. Stop where the market shouldn't go. We can identify where the trouble is, and all we're doing is we're trying to go with the large chart. We're trying to take advantage of everything that the large chart's saying. With the small triggers up, I don't know, you could protect yourself, you could get stopped out, right? So if it doesn't just run on a momentum trade, guys, your momentum trade's probably going to push up higher. And now with the small triggers up, we go right back into, I know where my next short comes from. If the momentum trade fails, I know where my next short comes from. And this momentum trade may not fail. But that's kind of the thought process. That's the first one with strong triggers. If that one fails, we look for the trend trade. And what we're saying essentially is that with all that momentum, I expect this zone to hold. And if that zone doesn't hold to the downside, I'll look for the trend trade because it means that my triggers are turning against the trade. And guys, most momentum trades, they will turn against it a little bit after entry because sometimes they dance, but usually momentum trades rocket. And this one is still working, but we're afternoon. Does that help a little bit? So it's two different entries. One, I'll sell the area with strong triggers. One, I'll force the close on the correct side of the small triggers because I don't want to fight that immediate momentum. There just wasn't a lot of room, but they did make it right back to trouble, which is pretty cool. All right, guys, that's it for me. Great day today. Does everybody have the materials that they need? Does everybody have their trade journals? Does everybody have their plans, their KISS plans, their TV plans? I can drop them in the room if you don't. Guys, all you have to do is realize that life is 90% waiting and 10% trading when you're a day trader. And it takes a lot of patience to do what we do well. Yep, I'll drop them again, K-Price. Awesome, Victor. All right, so I'm going to do TV plan, KISS plan in both spreadsheets right here. And guys, thank you everybody that shows up to my classroom. Thank you everybody that's learning this software. Thank you everybody that posts pictures, that asks questions, that takes me outside of my little comfort zone. This is what we do, guys, every day. I have been unable to quit on anybody yet, so I won't quit on you. Let's keep rolling. Holler if you need me. Reach out on Discord. Reach out on email. I'm going to go play Day Trader for a little bit. For grins. We'll see you guys in the morning. Hey, Miss Kim. Good to see you in here. I'll see you guys in the morning. Take care, everybody. You bad mother sucker. Oh, shit. very cool. Right now? Which Todd? Yes.